President Biden. Notably absent, China's President Xi and Russia's President Putin. The Treasury Secretary took aim at Russia for pulling out of an agreement to keep the world's food supply from being impacted.
We need to remain focused on addressing the devastating consequences of the war, including its impact on food security. Russia's withdrawal from the Black Sea Grain Initiative is deeply concerning.
President Biden and other world leaders will take part in behind-closed-door meetings all weekend. A Washington, D.C. jury has found former Trump advisor Peter Navarro guilty on 2 counts of criminal contempt of Congress. Prosecutors say Navarro tried to act above the law by refusing to provide documents and testimony to the House Select January 6th committee. Navarro attorney John Raleigh says his client plans to appeal the verdict.
This is the first time that a senior presidential aide who has served his president for 4 years has ever been held in contempt of Congress.
Navarro claims to have executive privilege. The lawyer for that 70s show star, Danny Masterson, will appeal the decision that will send the actor to prison for the better part of his life. Masterson, who is 47, received the maximum sentence of 30 years to life for raping 2 women. Global news 24 hours a day, powered by more than 2,700 journalists and analysts over 120 countries. I'm Michael Barr, and this is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 10:40 on Wall Street. I'm Amy Morris. Stocks are drifting, keeping Wall Street on track to close out its first losing week in the last 3. The dollar also losing some traction, but still on pace for a record streak of weekly gains. We checked markets all day long. Here at Bloomberg, Dow up 0.3% or 96 points, now at 34,597. S&P 500 up 0.4% or 18 points, now at 4,468. And NASDAQ up 0.5% or 65 points at 13,813. The 10-year yield at 4.22%, the 2-year yield at 4.95%. NYMEX crude oil trading at $87.49 a barrel. That's a gain of 58 cents. Brent crude up 70 cents, now trading at $90.62 a barrel. COMEX gold at $1,951.30 per ounce. And that's a Bloomberg Business Flash. Matt and Paul.
All right, Amy Mars, thank you so much. We appreciate it. We're getting lost in some car talk here, which we're apt to do here with Matt Miller. Paul Sweeney, Matt Miller here in the Bloomberg Interactive Broker Studio.
Should I just tease that? Because I think it's a very special car. You know, every week I'm driving a new car, and it's the best part of my job. I get some amazing vehicles, but I don't usually get anything. I don't think I've had anything like this for years. I've got an Aston Martin DBX 707. So it's an SUV, but it has 697 horsepower. And in my opinion, it's better than the Lamborghini Urus. It's better than the BMW XM. It's better than the Porsche Cayenne. Like, it is so unique, so one of a kind, but it's a beast.
It's a beast.
A beast. 0-60 in 3.1 seconds.
All right, you heard it here first. So we'll have some more reporting on that. I'm sure check out Matt's social media. He'll get you going. Will Rind, he's the Chief Executive Officer. He's also talking about Aston Martins, too. So I'm kind of stuck in the middle between these two knuckleheads. He's the Chief Executive Officer at Granite Shares Advisors. We like to talk to Will about ETFs and kind of where is he seeing demand for ETFs. And Will, thanks for joining us here. Appreciate you coming into our Bloomberg Interactive Broker Studio. Single stock ETFs. What are you guys doing with single stock ETFs?
Yeah, this has really been the big growth area for us as a business, but I think a new category for the market, over the last year. So we've just gone through a year of the first single stock ETFs. And very simply, they provide leverage typically, although if you're an inverse one, it's not necessarily leveraged, but they provide exposure to single companies. So very popular companies such as Tesla or NVIDIA, and provide people prepackaged leverage to those companies.
And so an example would be Granite Shares 1.5x short TSL daily ETF. What does that do?
Yeah, so that provides 1.5 times short exposure, so leverage short exposure to the daily price of Tesla. And then TSLR, which is the sort of corresponding one, that's the highest leveraged ETF you can get on Tesla, so 1.75 times levered to Tesla.
Wow. I mean, that's a way to play it. So what's the risk to you guys to offering that leverage?
It's not so much a risk to us. I mean, the risk in terms of managing it is really that you get outsized moves, clearly, because you have leverage. So if the stock price falls, our assets under management fall, and clearly we're levered to the market. So all things being equal, we lose more money. But the idea is that these are very popular trading vehicles. We have NVDL, which has been probably the star of the show this year, which is the 1.5 times leveraged NVIDIA. And so you can imagine since the beginning of the year, people have gotten crazy for anything AI, anything NVIDIA. And the NVDL ETF has just been a rock star for us this year. So I think it's really just a category that's growing, and there's a lot of demand for both the long and the short side with some of these popular names.
How do you?
That's up 392% this year.
Yes.
Only 392%.
Exactly.
On Mondays, I have an ETF show, so I'm looking at ETFs all the time, and
which he gets to leave the show early to go prepare for.
Yeah, okay, I have to. So, but expense ratios are something I look at quite often, and typically 1.15%, which is what you charge on the short AMD ETF or the NVDL. typically that's a relatively high expense ratio. But if you're going short, it seems low. How can you afford to charge that when do you need to get the borrow, or how do you structure the trades?
Yeah, so that's in the price, but these are designed to be held for short periods of time, so they're actually super cheap. When you think about it, we have to display an expense ratio just like everybody else on an annual basis. So the actual fee we charge is 99 basis points typically, but that's for if you held it for 365 days. Now, the average person is probably holding these for just a couple of days, or at least a short period of time. So the fee on a prorated basis that they pay is minuscule. And indeed, if people are trading, which you get a lot of these algorithmic traders, quant shops, on the street, they're probably intraday. They pay nothing, just the spread. So it's an incredibly efficient vehicle if you want to trade. And to your point, Matt, I mean, when you look at the shorts, I mean, this is incredibly attractive for people because one of the biggest things is majority of people can't go short, number one. But number two, they can't find the borrow. And when they do find the borrow fees for some of these stocks are incredibly high.
Exactly. Yeah. I'd imagine for Tesla, it's not cheap because it's probably a popular stock to short.
Exactly. So they can be hugely expensive.
I mean, you seem to the thing I like about what you guys do, you seem to find the hot story, like NVIDIA/AI. How quickly can you get an ETF from inception to in the market?
It very much depends. So providing it's following the kind of basic rule set, which is set by the SEC, it's 75 days from when you file the registration statement to getting it out. That's the latest, if you will. I guess they could have technically grant you effectiveness sooner than that. Where you have an issue is when you step outside of that standardized rule set. So, for example, the crypto ETFs or the Bitcoin ETFs that everybody talks about. When you're outside of that standardized rule set, then you could be looking at years to get approval.
Well, do they make it more difficult for leveraged ETFs, for single stock ETFs, for short ETFs? Because those are also, some people might criticize them, especially regulatory watchdogs.
Yeah, no, it's not more difficult because they're in the standardized rule set. And remember, leveraged ETFs have been around for well over a decade. And so you get leveraged ETFs on broad equity indices, on broad fixed income indices, on commodity indices and individual commodities. So single stocks is really just a continuation of an already big and successful category.
What's next for you guys in terms of new ETFs coming?
Yeah, for us, I think more single stock products is where we're seeing the growth, where we're seeing the action in the market. This is almost like a perfect market environment for these products because it's very volatile. People really don't know how to trade this market. In other words, don't have high conviction that the market's going massively up in one direction or massively down in another direction. So you see a lot of volatility in these names, and that's what traders, active investors really like, and that's why they love these leveraged single stocks.
Does the rising rate environment affect your day-to-day work at all?
For these products, I would have to say it's almost a benefit because people want to try and make more money in a world where the returns by definition are less because of the high rates. So it works well, but for some of our other products, we have income products clear that were, even though our product HIPS, for example, yields about 10% per annum, that was awesome when yields were zero, but now yields are a lot higher. It's sort of cut in half. Now it's still an attractive product. It's just, that's harder environment for those income products.
But it doesn't change like the day-to-day mechanics of creation and redemption.
No.
Interesting. I always find that kind of detail really fascinating because it's something that you don't have to understand to trade ETFs, and most people don't.
Yeah. Well, what it does do, Matt, I mean, this is probably a bit of inside baseball, but I do think that the environment for getting seed capital, for bringing ETFs to launch, has gotten harder because seed capital is typically given to you by a third-party firm, typically a market maker or a broker. So their financing costs have gone up. Therefore, the cost of them providing that seed capital to you has gone up. So that makes it more challenging.
How long will you, if you bring a new product to market, it takes a while to get inflows, assets under management. How long will you go before you say, okay, this is a hit or this is a miss and we're going to shut it down?
I think nowadays we're much more ruthless about that than perhaps we were a few years ago. And I think the taboo around shutting products has really gone away. And so that largely
Totally
helps
agree.
us.
No one cares. Yeah.
So exactly. So I think a year maximum would probably go before making a call if something's taken or not. And this market, I think, is a good market to do that because people have gotten so used to ETFs that I think you can tell fairly quickly if something's going to take or not.
Yep. All right, hey, Will, thanks so much for joining us again. As always, love checking in with you. Will Ryan, he's the Chief Executive Officer at Granite Chairs Advisors, LLC, talking ETFs. Breaking story crossing the Bloomberg terminal. Trump, Georgia grand jury recommended charging Lindsey Graham and others. We want to get to that story, this political story. We're joined by Ryan Teague Beckwith. He is the White House and politics reporter for Bloomberg News. Ryan, can you just briefly summarize kind of what this breaking news is?
Sure. Now, there was an investigative grand jury, which is maybe a little confusing because if you know anything about grand juries, they're usually not this sort of powerful and involved as they are in this particular Georgia case. But basically a citizen panel that was tasked with looking into attempts to overturn the 2020 election result in Georgia and decide if there was any criminal conduct and if so, who should be charged. And what we knew was that the Fulton County District Attorney eventually did charge 19 people, including former President Trump. What we didn't know until just now was what the grand jury had said before that. Now, we got the grand jury report, and it turns out that in addition to other people who were charged, they thought there were a few other people who should have been charged as well. That includes Senator Lindsey Graham and the two former Georgia senators, David Perdue and Kelly Loeffler. So that was a very interesting people because those are obviously U.S. senators, and that's a lot more high profile. And I think people are, that's the main news right now.
Yeah, and because they haven't been charged. I mean, that's the big question mark here, right? It was recommended by this grand jury that Lindsey Graham, a sitting senator, be charged, and he wasn't charged. So the question is, well, my first question is, does this mean he will be charged, could be charged in the future, or does this mean he dodged that bullet somehow, and then how?
I mean, I think that he dodged the bullet here because I think one is that this is different from a normal grand jury. You may have heard that, like, you know, you can indict a ham sandwich. So normally a prosecutor goes to a grand jury and says, here's the evidence that I've compiled, and here's the charges that I want to bring. And the grand jury basically serves as a kind of a veto to say, like, yes or no. But most of the time they pretty much say, yes, go ahead, indict. Sounds like you've got a good case there. In this case, the grand jury was charged with doing the investigation and making some recommendations, and then the district attorney is the one who's making the final decision here. And it's clear that there's sort of two factors. One is political. She's deciding maybe not to charge a sitting U.S. senator from a neighboring state with a crime because that's going to be even more contentious and what is already probably the most contentious case that she will try in her career. Two is that there's a speech and debate clause which comes into play, which is part of the Constitution that says that things that a senator is doing as part of having speech or debate about issues of the day, can't be sort of criminally charged. And it's a very open question of whether that would apply in the circumstances to the things that Lindsey Graham was doing. But she may have looked at that and said, I really don't want to complicate this already complicated case with having this whole separate constitutional argument about whether or not I can charge that. It may also be that the conduct that she's aware of or is able to prove is just not as easily sort of prosecutable as some of the other things that she's doing.
She's already indicted 19 ham sandwiches.
Yeah.
So
yes.
Yeah.
All right, I want to bring in Nick Ackerman. Nick is a former special Watergate prosecutor. Nick, from your legal perspective, why don't you think Lindsey Graham and former National Security Advisor Mike Flynn and others were not indicted despite the recommendation from the grand jury?
Well, I think it's a whole different story when you're in a grand jury. It's not so much you can indict a ham sandwich, but the standard in a grand jury is whether there's probable cause that somebody committed a crime. It's a lot different situation when the district attorney has to decide who among the recommendations they can actually convict beyond a reasonable doubt. The standard is completely different when you get to a jury trial, and it's much higher. I can absolutely understand why Lindsey Graham would be taken out here and recommended, as well as Flynn. It's pretty obvious that Lindsey Graham was basically repeating some of the same things that Donald Trump said in his conversation to Secretary Raffensperger, and was basically mirroring the position that Trump was taking. But I think they needed something more to really show that Lindsey Graham knew what he was saying was a complete lie and was part of this RICO enterprise to undermine the peaceful transfer of power. I just don't think they had enough evidence at the end of the day on these other people to say they could convict beyond a reasonable doubt. That was the issue.
So does this, the revelation today about, the revelation today, does this present any legal ramifications, legal liability for any of those that were named as being recommended by the Atlanta jury?
Well, it could ultimately. I mean, let's say some of these people wound up cooperating with the DA's office after they're convicted, or before they're convicted, they may try and make a deal. And if they know specific information about some of these people that basically take the district attorney's office over the line of reasonable doubt, yes, they could be indicted. And I'm sure they will be looked at as this case goes along. But certainly at this point in time, at the time that Fani Willis made her decision to indict, she's looking for individuals against whom she has enough evidence to convict beyond a reasonable doubt.
Ryan, I wonder how this will be taken in Washington. Does Lindsey Graham continue to mirror comments from Donald Trump?
I mean, he's not as actively involved in all of that. What he was doing here was like calling the Secretary of State and doing that kind of pressure of like, hey, are you sure you can't find something here? He's not
11,000 votes.
Yeah, he's not doing that kind of thing anymore, and so I think he's backed off a lot from talking actively about the election was stolen and whatnot. But he still remains like a Trump supporter, and is not renouncing any of this either. So.
And Ryan, do you think there's any political fallout from this? Will the Republicans simply say, "Hey, just this, hatchet job continues"?
Witch hunt.
Yeah, I mean,
Witch hunt, thank you.
I don't think this has any political fallout. I mean, I think for people who are closely following this and see these names on there, it's just furthers their belief that these people had done something wrong, and their hope that some of the people who are being charged will see justice. For people who think that this whole thing's a witch hunt, I think they'll just look at that and say, see, there's other people that they were trying to go after. I don't think this really moves the needle.
Nick, we only got a minute left, but I'm getting the sense lately as people try and get tried separately. Some people want quick and speedy trials. Others are fine with a longer time scale. That Fani Willis may have bitten off a little bit more than she can chew. Do you think it was smart to indict 19 people?
Yeah, absolutely, because all of these people were combined together to do the same thing, basically, to interfere with the peaceful transfer of power. What you're seeing right now is the result of a joint defense agreement among all of these defendants to try and muck up the case by separating it out either within the state case or trying to move it into the federal court. I think the federal court is a lost cause. There's no way that they can make the case that what any of them were doing was part of their duties as a federal officer. The state case, what this judge ought to be doing is saying that if any of these two defendants, any of the defendants who are asking for a speedy trial, he has to grant it. He should grant all of the defendants a speedy trial.
Right.
If you take just the two that have asked for it, Chesborough and the other defendant.
Hey, Nick, we're going to have to leave it there just in a space of time, but we appreciate it. Nick Ackerman, former Special Watergate prosecutor, and Ryan Teague Beckwith, White House and political reporter for Bloomberg News in Washington. This is Bloomberg.
Sorry, dude.
This is Bloomberg Markets with Paul Sweeney and Matt Miller.
We got a lot of green on the screen here, but the volume is light.
We constantly underestimate the strength of the U.S. consumer.
This is a market that's much more optimistic or bullish than maybe the central bankers are.
Breaking market news and insight from Bloomberg experts.
There's still some concern out there in the market that there is room for things to deteriorate a little bit more than what they're indicating.
As small and medium-sized businesses struggle, they don't present as much competition.
The supply chain has still got dislocations globally and here in the U.S.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
All right, coming up in this hour, we're going to check in on that Kroger M&A deal in the supermarket business. Jen Rhee and Jennifer Bartashis, they're both from Bloomberg Intelligence. They're going to join us. They're going to roundtable this thing and see if this big M&A deal gets done in the supermarket business. And it's Friday. That means it's Matt's favorite segment coming up. We're talking municipal bonds in focus today with Eric Kazatsky.
Still?
Yeah, baby. He's with Bloomberg Intelligence, and we're going to talk munis. And then our old friend Callie Cox, she's a U.S. investment analyst for eToro. She's going to come in and give us her market call. But right now, let's kick things off with a Bloomberg Business Flash with Amy Mars.
All right, thank you, Paul. The dollar's correlation to oil futures now rising to a 9-month high. The dollar's rise is actually slowing now. Still, though, it's on track for an 8-week winning streak. It's been really strong. We check the markets all day long here at Bloomberg. The Dow up 0.3% or 92 points, now at 34,592. S&P 500 up 0.3% or 12 points at 4,462. And NASDAQ up 0.1% or 21 points, now at 13,770. The 10-year Treasury, the yield actually at 4.22%. The 2-year yield at 4.94%. NYMEX crude oil trading at $87.61 a barrel. That's a gain of 73 cents or 0.8%. Brent crude up 0.9% or 85 cents. Now at $91 a barrel. COMEX gold at $1,947.50 an ounce. That's a gain of $5. The euro at 1.0715 against the dollar. British pound at 1.248 against the dollar. The yen at 147.64. That's a Bloomberg Business Flash. Matt and Paul.
All right, Amy Mars, thank you so much. We appreciate that. Matt Miller, Paul Sweeney live here in our Bloomberg Interactive Broker studio. We are streaming live as well. YouTube.com is where you need to go and just search Bloomberg Global News, and that'll get you there. Some M&A news today. Kroger and Albertsons agreed to sell 413 stores to C&S Wholesale Grocers in a divestiture designed to help win antitrust approval for their $24.6 billion merger. Let's break that down with a couple real pros here. Jen Rhee and Jen Bartashis, they're both at Bloomberg Intelligence. Jen Rhee, she covers all the antitrust stuff for Bloomberg Intelligence. Jen Rhee is our retail analyst covering the supermarkets, and they join us here. Jen Rhee, let's start with you here in our Bloomberg Interactive Broker studio. Is this enough for the regulators?
You know, I'm not so sure. I'll say I think this is exactly.
Just take a tough view at these
I
things.
do. You know, I'm just skeptical. Look at what the FTC's been doing for the last couple of years and the line they drew in the sand. You know, when this administration came in, they said, you know what, we're not going to settle deals that have problems anymore because we've been doing that for 40 years and it hasn't worked. It's left us with markets that are too concentrated. So we have to take a different approach. And they've done that. They've taken a different approach, even where companies offer up what I think is a pretty fulsome agreement to settle this matter. But here's the thing, they've been losing in court because the judges look at these divestiture agreements and the commitments that the companies are willing to make, and they say, look, FTC, this is good enough to fix these problems that you've outlined. And I think that's what's going to happen here. I think even if the FTC doesn't like this matter, they think these are groceries, it's food prices, it's sensitive to consumers. We have a problem with this. The chair, Lena Khan, has written extensively about having issues with grocery mergers and thinking they're problematic. But I think when these two companies exactly get that and go into court with this agreement, they have a really good shot at winning in court.
Jen Bartashis, jump in here and tell us what investors' view of this deal is.
Well, you know, obviously, tailing off of what Jen just said, you know, I think ultimately this deal will go through. You know, there are a lot of things that can happen, you know, with a combined Kroger and Albertsons entity that ultimately could be good for the industry. But one of the things I think is interesting about CNS as a buyer in this situation is that their primary business is as a wholesaler. It's not as a retailer. They do own a couple of Grand Union stores, and they own Piggly Wiggly Midwest.
Nice.
But those are largely franchised operations. And when you look at the track record of wholesalers that also operate retail stores, there's not the greatest track record there. So to me, that could be one area where the FTC might push back on CNS as a buyer. Only in that, Super Value was a distributor. They sold off the Shoppers chain that they had acquired. United Natural had tried to sell off the residual part of the Cub Foods chain in Chicago, and Spartan Nash only operates a handful of retail stores as well. And so that to me is one potential area of risk, as the FTC evaluates this. Granted, CNS has the balance sheet. They have the strength there to finance such a deal, but they're not actually known as an operator.
Interesting. So, Jen Rhee, would the FTC, do they typically look at who the buyer is and whether that's a good buyer?
Absolutely. That's half of the evaluation. First, the assets to be divested and the buyer. So here's what I have to say about CNS. It does sound like an odd buyer, but this FTC in 2021 approved the merger of Price Chopper and Tops, and they had to divest a number of stores, and the buyer was CNS, and the FTC approved that buyer. Now, right now we have 3 commissioners. 2 of the 3 voted yes on that deal back in 2021. So it seems, at least at that time, they evaluated CNS for that specific deal in those specific stores and found it to be sufficient. I think this is much larger scale. And it also remains to be seen, how did CNS do with those stores that they acquired? The FTC will be looking at that, and they're going to have to show that they were able to be viable competitors.
Hey, Jen Bartashis, talk to us about the supermarket business in general. I mean, again, I'm just amazed that Walmart. Walmart's just the biggest grocery store chain in the U.S. That just kind of blows me away every time you mention that to us. Talk to us about this merger in the context of the industry overall. Is that going to make a big change?
Well, what it does is it takes the number 2 and the number 3 sized retailers and combines them into an entity. A combined Kroger Albertsons gives them a lot more in terms of purchasing power. And theoretically, Walmart does dominate the U.S. grocery landscape by far in terms of market share and in terms of being the largest retailer. So if a combined entity between Albertsons and Kroger can compete more effectively against Walmart, that's actually not a bad thing for the industry as a whole. There has been pushback about the overall consolidation of the industry, but it could actually enable these companies to be even more competitive against the largest player out there.
Paul, have you seen Dopesick?
No.
Or Painkiller?
No.
These are 2 series, I think Netflix and HBO, I can't remember who. But anyway, they are touching in an extraordinary way. I knew that opioid addiction was a problem, and I've been reading the stories and headlines just like everybody else, but this really hits home when you watch these shows because it's so hardcore. Kroger has agreed to a $1.2 billion settlement for its role in distributing these extremely damaging drugs.
Okay.
Jen Rhee, I was listening to the news this morning, and they said this does not mean that they admit any wrongdoing.
Right.
Have you ever thought to pay $1.2 billion without admitting any wrongdoing? I mean, isn't the payment itself an admission of extreme wrongdoing?
Well, people with common sense and look at these things logically would exactly think that, yes. But technically with settlements, you never have to admit to the wrongdoing. You're saying, hey, it's worth it for us to pay this money just to get this off our back, to move on, to move forward, get rid of litigation, put it behind us. We're putting resources in to defend it, and that's why we've agreed to pay this amount of money.
They're not alone. To me, it's a little shocking because I grew up going Krogering for the best of everything, including the price. I didn't think they were killing everybody in my community. But you know what? Others have also settled. CVS, Walgreens, Walmarts have also entered global settlements of about $13 billion. Jen Bartashis, is this behind us?
I think for we've now seen settlements from the biggest players out there. I think that you're still going to see settlements from some of the smaller players that may still filter through. But it does appear at this point that we may have kind of reached that tipping point.
All right, the two Jens, Jen Bartash, Jen Rhee. Thanks so much for joining us here, talking about a lot of things in the supermarket business, M&A, Kroger's, Albertson, trying to get this deal over the finish line, announcing a divestiture there to do it as well. So we appreciate both of them joining us. And we're going to make a little bit of a pivot here because we're going to talk about municipal bonds. Focus on Munis is brought to you by Build America Mutual. Build America Mutual insures U.S. municipal bonds that finance essential American infrastructure and provides guaranteed income to improve any portfolio. Be a part of Building America. Invest in BAM insured bonds. Boom, we did it. Eric Kazatsky, he joins us. He does this stuff for a living. Eric, talk to us about the municipal bond market here. I mean, it's been a tough August, I would say, for a lot of the risk-on assets. What did you see in the muni market?
Yeah, I mean, good morning. It's been a tough August. It's been a tough summer. It's been a tough 2023 so far. If you look at fixed income and also munis, I mean, year to date, we're up about 1.3%. Not great, right where we sort of had with our initial year projections, but we were hoping that there would be a little bit more tailwind to the sector in the summer that just never materialized.
All right, so where are we seeing, when you talk to your investors, where are they kind of looking for opportunities these days in the municipal bond market, given that, boy, you can go to a 2-year United States Treasury bond and get 5%?
Yeah, I mean, look, obviously, like if in a risk on or risk off attitude for investors, that's really your decision matrix there. But we still think that there's a lot of value in municipals. Just depends on what you're comparing it to, and it depends on where you live as well. The most value we're seeing are going to be in those coastal areas, high tax areas, California and New York. And then, for instance, right, if you're a New York City resident in that plus 50% tax bracket, a taxable equivalent yield for a single A muni right now is going to be over 10%. That's really, really, really a compelling story to talk to investors about. And the thing that's sort of confusing right now is that we're not seeing meaningful flows come back into this space. That leads us to believe that there really is a wholesale shift move to cheaper beta, not just in our space, but in all of fixed income. SMAs in our space continue to anecdotally get flows, and they're moving away from mutual funds right now.
10%. Nice. That's more than you get from junk.
Exactly.
Yeah.
What is the
For
junk
sleep at
equivalent, Eric? Is there a junk equivalent in the muni markets?
Yeah, but our high yield sector, really, from a default statistic, is probably as good as a single A corporate or triple B corporate, right? So our high yield is really not high yield in that sense. Sure, you can really get down in the weeds and some hairy non-rated stuff, but right down the middle, if you look at our high yield index, it's really going to sort of tee up nicely with those triple B corporates as far as comps.
How about credit quality, Eric? Do we have any issues there or concerns creeping in? Because there's interest rates are higher and economy is still strong but slowing. Yeah. What's the credit quality outlook in your market?
Still constructive in our mind. Nothing in our space happens quickly, but there are some sort of slow-moving things that we're keeping our eye on, recession being one of them. Also, we have a developing story with Mayor Adams sort of ringing the bell on how much the migrant crisis is costing New York City. His estimates are costs are going to exceed $12 billion by 2025. To put that into context, New York City spends about $9 billion annually on their pensions. So, at the current pace, you could really have some crowding out of expenses on the city level, which is concerning for investors, but we're really not seeing that materialize in spreads just yet.
Wow. Yeah. That's a stat.
Yep.
So if we didn't have the migrant crisis, you could easily double New York City pension recipients' pay.
Exactly, right? Yeah.
All right, so what are you seeing in flows here in the municipal bond space, given that some of the yields are pretty attractive?
Yeah, I mean, like I said, it just hasn't really taken off, right? So some statistics, year to date, mutual funds have gotten about $1.3 billion. Look, much better than 2022, where the space lost about $145 billion, but certainly compared to averages of prior years, very, very far in comparison. We are seeing a lot of money, like I said, anecdotally come into the SMA space. It's one of those really sort of, obscure spaces that is hard to really measure. There's no clean data.
SME space?
Separately managed accounts.
Separately managed accounts, SMAs.
Yep.
SMA, that's different from SME,
Yes.
which is small
Exactly.
and medium-sized enterprises.
There you go. So SMAs.
Yeah.
All right. So, I mean, give us a sense, just remind us kind of in the municipal bond market, what percentage of kind of the investors are retail versus institutional?
That's really shifted over time, and it depends on, sort of where that retail is being defined. Going into those separately managed accounts, packages right now, a lot of that is still considered retail. So when you look at Fed reporting data, you've seen a shift away from households holding them, but they are going into those separately managed accounts. So they're still considered retail. It's still a large majority of our market. It's just sort of a reshuffling of the deck chairs in a sense.
All right. So, I mean, how about for me? I'm a New Jersey resident.
Yeah.
I can go and buy a New Jersey municipal bond and get a nice kind of yield, right?
100%, right? So let's assume you're in the very, very top tax bracket in New Jersey. You're still looking at about a 50% all-in tax rate, right? Not your effective rate, just gross tax rate. You're still looking at like a 9.3% long muni rate. So, still very, very, very compelling case, versus single A corporates.
All right. Enough issuance for you, Paul? Are they redeeming everything?
I get called every 15 minutes, Eric, and so I mean it's unbelievable. But it's all right.
The phone, buy some munis.
I know we're buying some munis. All right, if I saw a headline like this, what would you tell me? Munis attempt the reversed triple Lindy as school season starts. What does that mean?
The triple Lindy, you know that, right?
Well, everybody knows what the triple Lindy is, right? The most famous fake dive in the history of movies, right? It's a triple dive off of 3 springboards. And really what we're trying to say is the last 3 years have been horrible for September returns for munis, and we're really trying to turn it around this month. So far, not happening yet. Down 24 basis points month to date. I think at best, the sector has about 35 basis points of carry coming in that will help even that out, but we might just trade sideways for the rest of the month.
All right, Eric.
Thornton Mellon.
Who's? Oh,
Thornton Mellon.
Grand Lakes University. Exactly.
That was Rodney Dangerfield's character in Back to School, and he's the one who does the triple Lindy.
That's right. All right. It's all coming back to me now. All right, Eric, thanks so much for joining us. Eric Kazatsky, Senior Municipal Strategist at Bloomberg Intelligence. I guess if you cover munis and you got to write a lot of stuff about munis, you got to get creative.
Well, Eric does. I don't think other writers do, which is why his research is so much fun to read compared to the rest of the muni space.
Yeah, exactly right. And, Joe Misek makes it fun, too. I mean, he's been covering the muni since, I think, the beginning of that market.
And also a great writer. I mean, he helped Tom Wolfe write Bonfire of the Vanities.
Which I can't imagine how that ever came about.
I guess they just ran into each other at a conference, if I recall correctly,
right?
At the university club or something. And then Wolfe didn't know exactly how to write bond trader jargon.
Oh,
and Joe did. So Wolfe sent Joe a couple of pages and said, "Is this what it would really look like on a trading floor?" And Joe said, "Nah, it would really look a little bit more like this." And he sent back some corrections. And Tom said, "Thanks very much. I'm using them in my book."
Boom. There you go. Joe Misek. Not just municipal bonds, but also Bonfire of the Vanities. Good stuff. S&P 500. It's up about 0.4%, about the same there for NASDAQ. So a little bit of green on the screen. We'll keep on top of it. WTI crude oil, it's higher yet again. This is Bloomberg. Let's get some company news right now with Lisa Mateo.
Thanks, Paul. Apple shares are on the rebound after the company wiped out nearly $200 billion of market value in just 2 days with China's iPhone curbs. Now, there's also pressure from Huawei Technologies' Mate 60 Pro. But Bloomberg's Ed Ludlow says there may be a volume issue with that device.
It sold out and ran out of inventory within hours. And so the analysts that Bloomberg have spoken to says that indicates limited volume, but by extension indicates that even with 7 nanometer nodes, they are still not at volume. 7 nanometer is 2 generations behind the chip that Apple will put in its iPhone 15 to be announced next Tuesday. So there is not just a technology gap, but Apple clearly has a volume technology lead.
Well, Apple isn't out of the woods yet. The U.S. government's top consumer watchdog is taking a shot at its tap-to-pay technology. Bloomberg's Gina Cervetti has that story.
Officials say that because Apple and Google Pay dominate the mobile device tap-to-pay market, they could inhibit consumer choice. Apple requires iOS device users to turn to Apple Pay for tap-to-pay transactions. Google's Android does not, but regulators are concerned that Google could eventually change course.
All right, shares of Apple right now, they're up nearly 1%. Alphabet shares up about 0.6%. And TikTok's new Amazon copycat has gone live for some users here in the U.S. Bloomberg says that so far, the shop looks like a showcase for cheap Chinese-made products, and that could reignite U.S. regulatory concerns if it puts user data in the hands of Chinese sellers. Those are the company stories we're following this hour. We'll have more Bloomberg Markets in just a bit. I'm Lisa Mateo, and this is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:22 on Wall Street. I'm Amy Morris. The dollar losing traction now after a weeks-long rally on bets the Federal Reserve would keep rates elevated. Stocks and bonds edging higher. We check markets all day long here at Bloomberg. The Dow up 0.3% or 103 points, now at 34,603. S&P 500 up 0.4% or 17 points at 4,467. And the NASDAQ at 0.4% higher, 55 points higher. That's 13,805. The 10-year yield at 4.23%. The 2-year yield at 4.94%. NYMEX crude oil trading at $87.73 a barrel. That is up about 1% or 87 cents. Brent crude at $90.89 a barrel, up a little more than 1.1%. That's up nearly $1. COMEX gold at $1,945.70 an ounce, and that's a Bloomberg Business Flash. Matt and Paul.
And Amy Mars, thank you so much. We appreciate that. Thinking about these markets, in the early summer, things felt pretty good. Economic growth picking up again. Stocks were working. Even crypto was working. And then in August, it kind of petered out a little bit. The question is, where do we go from here now that everybody's back in the office? Well, maybe not today, but Callie Cox joins us. She's a U.S. investment analyst at eToro, and of course, she is a proud graduate of the University of North Carolina at Chapel Hill, but we talked to her nonetheless. Callie, thanks so much for joining us via Zoom here. I mean, it kind of felt like August kind of petered out a little bit for some of these risk assets here. What are you telling your clients these days?
Yeah, so first of all, Paul, great football win this past week.
Thank you.
Cheering for Duke always. I totally respect the school, unless they're playing us.
Of course, thank you.
But yeah, of course. But turning to August, August, look across the board, there was a lot of red. And I think it was a case of things got a little too good. Yields started spiking. Everybody thought the economy was coming back. It was coming back. But suddenly inflation worries popped back up again. We are telling customers that there's a lot of pressure on the economy. And really what we're seeing in the inflation picture is higher gas prices. And of course, that's something to pay attention to that can strain consumers' wallets. But is this an inflation crisis like we ran into in 2022? We don't think so.
It is. We are seeing much higher gas prices. I went to fill up this morning, and I think we quote the cash price.
Yeah.
Gas stations will charge you
you're a credit guy.
10. Well, who pays cash for gasoline? Like, why even have a cash price?
Yep.
Nobody's running around with Franklins, paying for gas in cash. $3.89 was the regular price I saw today at the pump.
Yep.
But I obviously don't tank the Aston Martin with regular grade gasoline.
No way. You got to go
so
for
I
the
ended
premium
up,
stuff.
It was like $5.19, the credit price for the premium at a
what are you
BP.
Yeah, that's nuts.
So you do see pressure on the economy, Callie. Do you see it coming through in the labor market at all? Because it still looks pretty damn good.
It does look pretty damn good, but at the same time, it's weakening, Matt. It's hard to find things to complain about in the job market. Let's be real. I'm watching jobless claims, and they are a little bit higher. There has been a bit of a move in the wrong direction or the right direction when you consider the Fed's objectives here, but it's still nowhere near, the amount of jobless claims that we saw at the beginning or, right before recessions in the past. And job data follows that as well. Hiring in the, high 100s was about average in the 2010s. And you have to remember, too, we're dealing with a bigger labor force here. It's tough to look at absolute numbers, but, I'm pretty happy with what we're seeing in the job market, even though there is a lot of pressure and we're seeing wage growth come down as well.
What do we need to see? We're in that Goldilocks What do we need to see? What does the Fed need to see to cut rates, Callie?
So this is a big, big question right now. And Jay actually told us in July that the Fed would be open to cutting rates if they saw enough progress on inflation. That surprised me because before that, the Fed had tried not to allude to rate cuts, first of all, but it also, talked about rate cuts in a recessionary manner. If we're forced to cut rates because the economy falls off a cliff, then, we'll do it, but don't expect that anytime soon. Powell's tone changed a lot in July. Powell, again, hinted to, cutting rates if inflation made enough progress. Obviously, inflation is moving in the wrong direction right now. Rate cuts still seem far off. One more hike could be on the table, but I think with inflation where it's at right now, that is something we should consider. The fact that, Powell is kind of seeing this risk reward balance even out a little bit.
Callie, how do you guys think about valuation in the stock market here? A lot of folks are telling me, if you pull out the Magnificent Seven, this market's not that expensive here, and you should be looking for some names, maybe some names that have not participated. How do you guys think about valuation?
Yeah, so we actually agree. We don't think valuation is a big risk right now, but you have to dig down to a sector level. If you look at a sector by sector painting, you can see that tech's valuation is quite high compared to where it was in the past, and also the S&P 500's valuation. I like looking at the valuation of value versus growth. I said value a lot there. The PEs that we're seeing in value versus growth, because value stocks are heavily discounted on a historic perspective relative to growth. And we're pointing that out to customers, saying if interest rates stay high, we could see some opportunities there.
And growth is also already too expensive, right? Or do you see any growth stocks that look attractive?
Growth, I think, again, you have to dig below the surface. I said tech, tech looks quite expensive. There are different flavors of tech that you have to look at. But there are other growth and rate sensitive sectors that do look a little bit cheaper. Of course, they don't have the profile of tech, but we don't hate going long duration here and, preparing yourself for rates eventually coming down, because again, there's a lot of pressure on the economy. We know what the Fed is trying to do. So, when we're in this position, when people are worried about rates moving higher, it may make sense to take the contrarian view.
How about energy? Because we've been paying a lot of attention to this move up in oil. We got WTI crude oil up another 1% today to just under $88 per barrel. How do you guys think about the energy space?
Well, if you think inflation is coming back in force, then, it's probably smart to look at energy. And those tangible assets and the companies that benefit from the rise in tangible assets. We think this rise in gas prices and oil prices isn't sustainable. We think it's a technical move. We think it's supply driven. So based on that, we wouldn't expect energy stocks to maintain this rally. The question is for how long, though. We think that that's a short-term view, but how long is short-term? We're not sure. We can't predict the day-to-day. But long-term, thinking months, several months down the road, I mean, we don't expect oil prices to keep this up.
You like any risk assets outside of the U.S., Callie? Do you look outside of the U.S.?
I mean, we have U.S.-focused customers, but eToro is a global platform, so of course we look outside the U.S. Globally, I think the rise of the dollar is going to be a huge pressure, especially on emerging markets. And then you see what's happening in China overseas. And I'll sum it all up with there's a reason why global stocks are trading at a lower PE than the U.S. right now. Is there value there? I think you have to evaluate it on a country-by-country basis. But again, there's a reason why global markets are cheap. And it's smart to diversify, but you have to also reckon with the different situations you're running into.
So within the U.S., are there sectors, Callie, that you like right here?
Yeah, so I think this, again, depends on timeframes. As long as the economy is chugging along, especially given the pop in growth that we could see this quarter and that we have seen for the past few months, I think some cheaper cyclicals could be an interesting short-term play. However, again, a lot of pressure on the economy. And if you think that the economy is going into a recession, then certain sectors like bonds and real estate, for example, could look cheap as well. I mean, right now we're telling customers that portfolio positioning isn't black and white. And there's a big difference between a month from now and a year from now. So, we like long duration here. We like, piling into those rate sensitive sectors. But at the same time, cheaper cyclicals could perform well if we continue to see economic data do well.
Hey, Callie, thanks so much for joining us. Always appreciate getting your thoughts there. Callie Cox, U.S. investment analyst at eToro, formerly of Bloomberg. So we love checking in with Callie. So, Matt, when will you get an EV? When will you pay for an electric vehicle?
I'm thinking about it right now because car makers are offering better deals on leases than you can get on financing. So, for example, I'm weighing for the family vehicle a BMW X5, which is a hybrid. I love it because it has an inline six.
Of course.
Versus a BMW iX, which is a fully electric vehicle. It's almost the same size as the X5. The difference is the iX costs a heck of a lot more to buy. And I'm not ready to pay that much for a fully electric vehicle. But BMW is offering like $8,000 back on if you want to lease it because of the tax credit that you would otherwise get. So it turns out that leasing the iX costs much less on a monthly basis than financing the X5.
Interesting.
So, and I looked at my wife's Volvo, which she, by the way, loves, and the design language is gorgeous, but it has a 2-liter 4-cylinder engine, so it's not enough for me.
4-cylinder?
Yeah, I looked at historically they have done that. Anyway, I looked at that. She's had it for 2 years, and she's put 7,000 miles on it. So I thought she's like the ideal candidate for leasing, right? Because you can get such a great lease deal if you're going to put almost no miles on the car. And I'm the kind of person that likes to keep buying new cars every couple of years. So leasing makes a little bit more sense for someone like me than buying.
All right, we'll stay on top of that one for you. Let's head down to Washington.
Was that answer too much for you?
No, that's perfect. I'm all in for that, particularly when it's at BMW. Right now, let's head down to Washington, D.C., World and National News with Nancy Lyons.
Thanks, Paul. A major storm is looming in the Atlantic. Hurricane Lee has quickly turned into what could be the most intense storm of the year. Bloomberg meteorologist Rob Carolyn is tracking the storm.
Lee took just 30 hours to go from being a hurricane to a Category 5 hurricane, and it's moving over even warmer waters today. That means it may intensify further. I really wouldn't be surprised if we see the sustained winds in this system get up over 175 miles an hour. That'd put the gusts up close to 200 miles an hour. But fortunately, Lee is staying away from any land masses.
But Bloomberg meteorologist Rob Carolyn says it is expected to stir up the surf in the Caribbean. A month after that deadly wildfire destroyed the historic town of Lahaina on Maui, nearly 400 people are still missing. Teams of rescuers, cadaver dogs, and anthropologists trained to detect fragments of human remains have searched nearly all the region.
President Biden is now in India for this weekend's G20 summit, and while Ukraine will be one topic of concern, Bloomberg's Anne-Marie Hordern says without China and Russia there, the U.S. will also be appealing to other nations to stick with the U.S.
A lot of this is going to be about what the West can do for the global South, what they can do in terms of development funding. The U.S. is really going to want to talk about funding for the World Bank, and for them, they're really trying to outline, you can still stay with us, we will support you, and this is an alternative path to Beijing's Belt and Road.
Bloomberg's Anne-Marie Hordern. FBI Director Christopher Wray says he's increasingly worried about Iran. He says the regime is becoming more brazen against the U.S.
In the last couple of years alone, we've had Iranian actors conduct a cyber attack on a children's hospital in New England, try to assassinate the former U.S. National Security Advisor in the United States.
Ray says he believes Iran's actions are simply different. Global news 24 hours a day. I'm Nancy Lyons.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:40 on Wall Street, and I'm Amy Morris. Federal Reserve officials are increasingly optimistic they can quash inflation without causing serious economic pain. The markets seem to like it. We check the markets all day long at Bloomberg. The Dow up 0.4% or 126 points, now at 34,625. The S&P 500 up 0.4% or 20 points at 4470, and Nasdaq up 0.5% or 75 points, now at 13,823. The 10-year yield at 4.23, the 2-year yield at 4.95. NYMEX crude oil trading at $87.63 a barrel. That's a gain of 76 cents, up 0.8%. Brent crude up 0.9%, a gain of 82 cents, now trading at $90.72 a barrel. COMEX gold at $1,944.80 an ounce. The euro at 1.0714 against the dollar. British pound at 1.2477. The yen at 147.64. Bitcoin at 25,869 even. And that's a Bloomberg Business Flash. Matt and Paul.
Amy Mars, thank you so much. We appreciate that. All right, here's something to chew on. In the United States, Matt, there is, there's a structural need for infrastructure investments. America's infrastructure is in clear disrepair. The American Society of Civil Engineers gave America an infrastructure score of a C-. That's not very good.
I thought that was really good.
You thought it would have been worse?
Don't forget that I just moved back from Germany, so...
They know infrastructure?
And last month I was in Spain.
Right.
These countries have far better infrastructure than we do. Not only are the roads, much better to drive on, they have rail networks for, commuters linking every city to every city. And, you don't have to own a car if you live in Europe.
Yeah, but this is a big country, dude. That's why we made the interstate interstate.
But they're crumbling those interstates.
Yeah,
and
all
a lot
right.
of the bridges are
Guess
simply
what?
falling down. And yesterday we had that story about Texas, right? Their grid doesn't just fail in the winter, it fails in the summer too.
That's Texas, and they've got their own issues. And they quite like it the way down there in Texas. All right, but guess what? You can invest in this stuff on the reconstruction or the infrastructure in the U.S. There's ways to play that. Arnie Nowak joins us. He's head of Systematic Investment Solutions at DWS Group. And I'm guessing, Arnie, you're joining us here in our Bloomberg Interactive Brokers studio. Thank you very much for coming in. I'm just guessing there's an ETF to play this upgrade of the U.S. infrastructure. Tell us about it.
Indeed, that's a very safe bet, and thank you for having me over here. Yes, the ticker symbol is UPGR, or pronounced upgrade. No pun intended, or maybe slightly intended. But yes, you're absolutely right with your assessment. In a way, seeing the other side of the coin, it's a real opportunity here because investment is necessary, investment is needed, and where investment is needed, potentially returns can be had.
Explain, we've had you on here before, and I think systematic investing is fascinating. Explain what systematic investing is for investors, for listeners who don't necessarily know.
Absolutely, with pleasure. So simply speaking, it's index-based investing or rules-based investing. So all of our investment strategies, including UPGR, follows a specific set of rules. Our portfolio managers don't have any discretion to deviate from that. We simply stick to what we told everyone that we would do.
That sounds very German.
But it is kind of active though, right?
It's active in a sense that, UPGR doesn't track, let's say, the S&P 500. So UPGR itself and the companies that we invest in, we have a relatively small cap and small cap growth tilt. So depending on which benchmark you choose, it has an active share or deviation from that benchmark, but we don't, it's not a discretionary selection process.
Yeah, now that you mention it, I haven't thought about it. It is very German.
That is very German.
They love rules.
Darn right. And they follow the rules and they're good at it. I mean, we could learn a little bit of that here maybe. What are the holdings? Give me some examples of the holdings that are in UPGR if I wanted to invest and participate in the rebuilding of some of the infrastructure.
Yeah, so rather than throwing out names, because these are relatively small companies, mostly quite not very well known yet, But essentially, these are companies that are involved with things like waste management. These are things involved with clean energy production, in the upgrading of the grid. And those 2 points, the clean energy production and grid upgrades, actually critical to have any level of energy transition, because as you may know, renewables have a very different nature compared to burning coal or even nuclear power plants, because there's a lot of peaks and troughs in terms of energy generation. So there is a real need to look at how do we transition into something that is more sustainable, something that is future-proof in a holistic kind of way.
Well, in this administration, this Congress has passed a couple of bills that are going to spend more than $1 trillion on upgrading the grid and our energy sources. So I guess part of the idea is to take advantage of that spending.
Exactly. So that sort of explains a little bit also our timing. Upgrade is already launched. We launched it over the summer. We're actually ringing the closing bell at the NASDAQ exchange. So if you're around, come join us later today. But yes, we want to be sure that we're relatively early to give investors the opportunity to participate in what we believe is somewhat of a transformative story, really, for the United States. And frankly, it doesn't really stop here. Upgrades is a US-focused portfolio, but the need for infrastructure investments, and I appreciate you praising my home continent of Europe, but it's not all good. Sometimes the grass is greener on the other side, sometimes it just appears, but there is also a very strong need for infrastructure investments over there as well, in particular grid-related.
Well, I was living in Berlin for the last 6 years, and I had to go to Munich a lot. I had to go to Frankfurt a lot, and it's just so many choices. I could drive. I loved it. I had a 911 there, which was amazing. I could take the train, no problem. Didn't run on time, obviously. The Deutsche Bahn doesn't do that, but it did run. Or I could fly quite easily, especially when Tegel was like the best airport ever. Berlin used to have 2 amazing airports, and the Greens shut both of them down. Really? And for much worse options.
What's the one right in the city?
Now the name escapes me, but right in the middle of the city with the largest building, in the world.
Tempelhof.
Tempelhof, exactly. When I was a kid, I could ride my bike to Tempelhof and fly to London. They closed that years ago, and they just closed Tegel for Schönefeld and the new BER, which is like an hour away. So you have to drive all the way out there. There's no train to get there. But I think you're going to ring the bell at the NASDAQ, which is not only will we show that on Bloomberg TV, and also people watching us on YouTube.com streaming will be able to see that. If you go to Times Square, they have a massive screen out there. So just the people, the tourists milling around Times Square will look up and see you ringing the bell as well, which I think is fascinating. The ESG thing has gotten kind of a bad rap on this side of the pond, from the right mostly, but I think your main goal is profits first, right? You want to make money here, and then doing good is just a sort of a side benefit of that if people buy Upgrade, right?
Yes, yeah, that's a very fair point. The fund has certain filters, but they're very light. We just want to be sure that we don't inadvertently buy something in the portfolio according to the rules that afterwards leaves a bad taste in investors' minds. But we don't really see this as an ESG product. It's called green energy, but we might as well call it, or green infrastructure. We might as well call it future infrastructure, because this isn't necessarily
better infrastructure.
Exactly.
Higher tech infrastructure, more efficient infrastructure.
An upgrade.
Yeah. So, I mean, here in 2019, another stat for you, the United States ranked 13th in the world in a broad measure of infrastructure quality. That's down from 5th place in 2002. So it seems like we got some work to do. Is a feeling in the industry that these bills are a start? Are they enough to get it done? Or what's the feeling about the infrastructure bills?
Yes. So I would say, and speaking from my personal viewpoint, I always think progress over perfection. The need is clear. You quoted the stats. So let's just go and start doing something. $1 trillion sounds grand, and it sounds big, and it is substantial. It obviously takes the form of tax incentives and other financial incentives. Whether or not it's sufficient will be in the eye of the beholder. I am sure this will be and continues to be an ongoing process rather than fixing it all in one go. It's, we're talking about big projects. We're talking about a potentially sizable transformation of how energy is being generated. And that takes time, it takes adjustments, and budgets will need to potentially be adjusted accordingly.
Don't let perfect be the enemy of good.
Yep, exactly. I've heard that before, and that makes sense to me. Arne Nowak, he is head of systemic investment.
Systematic. That's different. Yeah, systemic is...
All right, we're not going to go on down that rabbit hole again. Head of Systemic Investment Solutions.
Systematic.
Well, it says systemic here.
That's not correct.
DWS Group, we appreciate it. We'll get back to that thrilling discussion coming up. This is Bloomberg. Let's get some company news right now with Lisa Mateo.
You got it, Paul. Imbue, a startup building large language models to power artificial intelligence tools. It's raised $200 million from investors, including NVIDIA, at a valuation of more than $1 billion. We have more from Bloomberg's Abigail Doolittle.
I would say that this news is a positive, more so for Imbue as opposed to NVIDIA, because when you think about it, they're a part of a $200 million investment in this AI startup. They have a greater than $1 trillion market cap. So it's a very small investment for them, but nonetheless to create AI agents capable of reasoning. And the goal is to make users more productive.
Now, sources tell Bloomberg NVIDIA plans to partner with the Tata Group on artificial intelligence, and that comes just hours after another Indian conglomerate, Reliance Industries, announced a similar deal. Shares of NVIDIA right now, they're down about 1%. Well, from tech to retail, where workers are fed up and quitting.
Many say the job with its low pay and erratic schedules isn't worth it. But the pandemic years added a whole host of other issues, from the uptick in shoplifting to confrontational customers. According to McKinsey, the quit rate for retail workers is more than 70% higher than other industries.
All right, and once a symbol of luxury, the Barney's brand is entering the fast fashion market. The Wall Street Journal reports Forever 21 has released a Barney's New York collection. It includes blazers, button-downs, turtlenecks, and faux cashmere and leather outwear. Barney's filed for bankruptcy in 2019, and it was sold for parts in 2020. Those are the company stories we're following this hour. We'll have more Bloomberg Markets in just a bit. I'm Lisa Mateo, and this is Bloomberg.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
All right, looking at these markets right here, S&P 500 up about 0.4%, NASDAQ a little bit better, up about 0.5% here. The VIX all called out for Tom Keene. It is lower, down below 14.13.65 on your VIX. A 10-year Treasury yields are pretty steady right here, 4.25% there. WTI crude oil continues to move a little bit higher, up about 0.8%, $87.55 per barrel. Let's go head down to Washington, D.C., World and National News with Nancy Lyons.
Thanks, Paul. The full final report from the special grand jury in Georgia that investigated former President Trump is now public. This was the group of people that recommended charges that eventually led to an indictment of Trump and 18 others with felony racketeering and numerous conspiracy counts. The report lists those they recommended for indictment but were not charged, and that list includes Senator Lindsey Graham, former National Security Advisor Michael Flynn, and former Senators Kelly Loeffler and David Perdue. The grand jury, by a unanimous vote, did find there was no widespread fraud in Georgia's 2020 election. Cascading crises will pose a challenge to long-term economic growth. That's the warning the leaders of the Group of 20 Nations plan to issue at their summit in India this weekend. That's according to a person familiar with the draft of their communique. Bloomberg government Zach Cohen is following the G20 from Washington.
Chinese President Xi Jinping is not going to this meeting of the 20 biggest economies, although Premier Li will be there. And really the key question for the Biden administration is to continue to build up support among democratic nations as sort of a counterweight to the Chinese regime.
Bloomberg government's Zach Cohen says other hot topics at the summit, Ukraine and the climate. SpaceX is being ordered to take corrective action after a mishap with its Starship rocket back in April.
The entire Starship stack continuing to rotate. We should have had separation by now. Obviously, this does not appear to be a nominal situation.
That was all caught on camera. The FAA says SpaceX will need to take 63 corrective actions before it gets another launch permit. SpaceX hopes to send astronauts to the moon and eventually Mars on the Starship rocket. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons. Now back to you, Paul and Matt.
All right, Nancy, thank you so much. We appreciate it. Matt Miller and Paul Sweeney live here in our Bloomberg Interactive Broker studio, streaming live on YouTube. Matt, have you ever been to the Atlantis Resort in Bahamas?
I have not been to it, but I know like a million people have been.
It looks really cool, but I've just never gone. But
no, me either. But it is. I would not be surprised if you told me it is the most popular, it is the most visited resort in the entire Caribbean, because it just seems very much like the top choice for a lot of people.
Because it looks like it's got something for everybody. Brookfield Asset Management is exploring the sale of Atlantis Paradise Island, Bahamas, and could fetch roughly $2.5 billion for the luxury resort. That's according to people with knowledge of the matter. So they've owned this thing since 2012 via a debt restructuring. They've explored selling it in 2019. Bloomberg News reported at the time before the effort was halted by the pandemic. Now, maybe it's a good time to sell it. I don't know. I mean, interest rates are higher. A lot of real estate is, particularly the office real estate, is in distress, particularly in the big cities. We're seeing even big institutional owners like Brookfield turning the keys back over to the lenders. But this is a unique property, so I would think it would have a lot of interest.
Well, and $2.5 billion is a drop in the bucket for Brookfield, right? They have almost $1 trillion in assets. I think $850 billion is what they manage in total right now. They've owned Atlantis since 2012, since the debt restructuring then. Our story says it was developed by Saul Kurtzner, who is apparently a storied South African hotelier and has hosted New Year's Eve events headlined by performers including Fergie and Sting.
Nice. I mean, the water park looks awesome. It's got a casino. It's got a gajillion hotels. So I would think people are going to continue going to this place no matter what, because it looks like a one of a kind property in the Bahamas. What can go wrong in the Bahamas? This is Bloomberg.
This is Bloomberg Markets with Paul Sweeney and Matt Miller.
We got a lot of green on the screen here, but the volume is light.
We constantly underestimate the strength of the U.S. consumer.
This is a market that's much more optimistic or bullish than maybe the central bankers are.
Breaking market news and insight from Bloomberg experts.
There's still some concern out there in the market that there is room for things to deteriorate a little bit more than what they're indicating.
As small and medium-sized businesses struggle, they don't present as much competition.
The supply chain has still got dislocations globally and here in the U.S.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
All right, coming up in this hour, we're going to check in with Catherine Lim, senior analyst. She covers consumer and technology with Bloomberg Intelligence, because I want to talk to her about this company that's coming public, Amer Sports. They make Wilson tennis rackets and Solomon ski boots. Those are my favorite ski boots, like that stuff. And plus, we're going to talk about Matt Miller. What is Matt Miller driving these days? You know who we got? Michael Dean. He covers all the Euro autos.
Yeah.
So he's like one of your favorite guys. We'll get him in there. We'll talk about Matt, what he's driving, because he's
a total car guy himself.
Total car
as well.
guy.
He loves cars.
Yeah, he loves cars. Kevin Tynan, who does the U.S. automakers, he loves cars.
True, but a lot of analysts in this space don't care about cars.
I know. They're just more about the stocks.
Yes.
These guys,
they live
love cars.
and breathe gasoline.
Yeah, so we're going to do all that kind of good stuff. That's coming up in this hour. But first, let's kick things off with Mr. Charlie Pellet.
Have stocks driving higher right now. The Dow, the S&P, NASDAQ, all in the green. S&P, however, on track for a losing week. Right now, we've got the S&P up 11, up by just under 0.3%. The Dow is gaining 59 points, up 0.2%. NASDAQ on this Friday, holiday shortened trading week, up 48 points. We're up now by about 0.4% on the NASDAQ Composite Index. 10-year yield at 4.24%, with a 2-year yielding 4.96%. Gold, little changed, down 23 cents the ounce to $19.19, virtually unchanged on the day. West Texas Intermediate crude pushing higher, up 0.9%, $87.65 a barrel. Brent up 1%, $90.78. A rebound for Apple shares today. They're up by 1%, $179.34 on Apple. Apple, of course, unveiling its newest iPhone next week as the tech giant contends with a growing ban on iPhone use among government workers and a contentious new phone from China's Huawei Technologies, which is providing homegrown competition. Dan Ives is senior equities analyst at Wedbush Securities. He is sticking with his $230 price target on Apple shares despite the China concerns, and he was a guest this morning right here on Bloomberg Markets.
In my opinion, bark's a lot worse than a bite. I mean, there's essentially been a pseudo ban of government employees for Apple in terms of iPhones the last 2 years. Now, maybe there was a little more restrictions here, but we're still talking about what we believe is 500,000 iPhones max, relative to what we believe is going to be 45 million sold in China in the next year.
And you can hear more of the conversation with Dan Ives on the Take podcast. You can download it wherever you get your podcast. Again, Apple shares up now by 1%. Recapping, stocks are higher with the S&P up 11, up by about 0.2%. 2-year at 4.96% with a 10-year 4.24%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
It certainly was. Charlie Pellet, thank you so much. We appreciate it. Let's see what's happening under the hood on some of these stock markets, see where we got some movers out there. We do that with Bloomberg's cross-asset editor, Michael Regan. He joins us via Zoom. Michael, what are you looking at today?
Yeah, Paul, not a ton of sort of company-specific news out there today on this, end of summer Friday that's moving things. I'll give you one that's kind of worth checking out. First Solar's up a lot. Analysts were just super impressed with their capital markets day. They basically said that their capacity is sold out all the way through 2026. So really positive stream of comments and upgrades from analysts after that. Deutsche Bank upgraded the stock to buy, raised their price target. JP Morgan raised its price target. Otherwise, I do think it's the stock market's taking its cues from some of the other asset classes. Energy is in the lead again today. That breakneck rally in oil that we saw earlier in the week, It did take a breather yesterday, but crude's back up again today. Everyone focused on those OPEC plus supply cuts. So that has energy really leading the way. As Charlie mentioned, that rebound in tech is very important today. It was a pretty weak couple of days for tech, especially Apple, down about 6.5% in the previous 2 days. That dragged down a lot of its suppliers like Qualcomm and Skyworks. This China issue is front and center, I think, for a lot of people with Apple. You played some quotes from the analysts saying, well, maybe the government ban isn't that big of a deal, a tempest in a teacup to some degree. But I do think the other thing worth talking about with Apple is the strength of the dollar, and specifically the weakness in the Chinese currency, that Chinese yuan really flirting with a record low, Paul. So I think that adds one more headwind to Apple in China, in addition to that new Huawei phone. If that's going to be a lot cheaper than an Apple product on a local currency basis, I think that's something people are sort of trying to wrap their heads around too ahead of this iPhone launch next week.
Yeah, we had Dan Ives on. He is an analyst at Wedbush Securities, very bullish on Apple. And he kind of, in his research, saying he's kind of calling that risk to Apple, quote unquote, overblown. And he cites kind of the quality of this Chinese phone not as good as the Apple phone, maybe a couple generations behind. So, but clearly it has been an issue, a headwind for the stock this week.
Yeah, and it's funny, you look at price target was cut for Apple. JP Morgan had a little bit of a cautious note out, cutting their price target. Well, they cut it, Paul, to $230 a share, which is still a 30% premium to where it traded yesterday. So, not quite as bearish as, the price action over the last couple of days would suggest. But, definitely a risk there worth keeping an eye on. Obviously, Apple has reemerged as sort of the centerpiece of the stock market narrative these days, Paul.
By the way, I've been waiting all week for Kroger earnings, hoping to hear more about their artificial intelligence plans. Not one mention in the report today.
Yeah, I guess AI hasn't quite hit the grocery aisle yet, Matt. But
dude, last quarter they mentioned it 8 times.
Yeah. Nonetheless, hey, a nice pop for Kroger, up about almost 4%. So selling a few stores as well, which could be helping sentiment a bit as well. But certainly one of the bright spots of the market today.
So, what do you think is the next catalyst for this market here, Michael? We're through earnings. I guess are we waiting on the Fed, or do you think the market's going to move on some of this inflation data we get next week?
Yeah, I think a little of both, column A and column B, Paul. But one thing I've been really had my eye on this week is these regional banks. That's a story that's just not going away. Really sharp weakness in the KBW Regional Bank Index this week. They are getting a little bit of a buy the dip today. But that issues with the regionals just really aren't going away. We're seeing the yield curve invert further this week. Obviously not a good sign for regional banks that tend to borrow on the short end and lend out on the longer end. And then Moody's had a really interesting report out earlier in the week talking about sort of shifting the focus for the regional banks to commercial real estate. Something we've all talked about till we're blue in the face this year. But Moody's really saying, look, there is a lot of office construction loan maturities coming in the next 18 months, a lot of high loan to value loans on the books of these banks. And it's going to be tough to see that debt roll over. And even the debt that's not rolled over, well, banks are carrying those assets on their balance sheets at really low yields. That has really hurt the value of those loans. So as far as new catalysts, I think we're going to, keep returning back to the same catalyst we've talked about all year, that those regional banks, this geopolitics with Apple, China, and obviously the Fed, and the CPI data next week is going to be important. I think the headline number is actually supposed to tick back up a little bit for CPI. It's tough to predict what the next big focus of everyone will be, but I don't think we've sort of worked through, the main themes of the year so far. So stay tuned on all those issues.
When does earnings season start again?
No, don't even go there. Don't even go there. We got to get through, mid-October to answer your question.
Ah, okay.
Yeah, so we got time. We got time. All right, Michael Regan, thanks so much for joining us there. Michael Regan, he's cross-asset editor, joining us via Zoom. How about that Zoom technology? People don't even need to come into the office, man. They can just
Unless you work at Zoom.
Yes.
In which
then
case,
you have to come back.
I have, the last couple of days has been the worst traffic I've experienced since I moved back in January of 2022.
Really?
So at least for my commute, which is, Scarsdale to New York, regular hours, coming in around 7 or 8 and going home around 3, which I think is like regular hours these days. It's been packed.
Really? So you think people are coming back to the office?
Well, I definitely think like post-Labor Day, like the start of school. Yeah, I think the last couple of days have been packed. Today will be obviously, everybody works from home today, right?
Right, exactly.
I'm surprised you're here.
I know. Go figure. I mean, the beach is looking good too. I don't know how I'm not down there. Let's talk about a new IPO potentially coming that's going to be very interesting. Amer Sports, the maker of Wilson tennis rackets and Solomon ski boots, that got my attention.
Dude, I have to say also, my favorite boots and my favorite skis typically are Solomon. They're just like a go-to.
I know. They do good stuff. And tennis rackets, I've had a Wilson tennis racket forever. Bloomberg Intelligence analyst Catherine Lim, she covers all the consumer and technology for Bloomberg Intelligence. She's based in Singapore. I have no idea where she is today, but I see her on the Zoom. I hope she's in Singapore.
Is it Amer Sports, by the way?
I don't know.
Catherine, is it like America? Are they trying to pull a fast one on us, or how do you pronounce it?
Well, you know what? This is a Finnish company, which Antasport had actually acquired sometime back in 2019. That's when the deal was concluded. They started initiating the plans to actually acquire this, again, Finnish company that, you've actually mentioned. They've got very well-known brands. Wilson is one. Solomon is one, and actually T-Rex is the one that has actually done exceptionally well in China. And notwithstanding, of course, they actually do have Atomic, which I believe, it is a complete gear.
Also great gear. Atomic makes my favorite scuba gear, actually.
Really?
Yeah, they make incredible regulators. High-end equipment.
Yes. So it's a mix of, very well-established brands. And it is interesting to see that they're actually seeking a U.S. IPO and obviously looking to raise funds, which I do believe it is for their expansion both in China as well as overseas.
So, I mean, they've got some competition out there. I just think about the consumer brands, Nike, Adidas, VF Corp. How are they doing in terms of market share?
Did they buy Solomon from Adidas? Because Adidas used to own Solomon.
Right. You know what? That is a very interesting point that you actually raised, because as you may be aware, there's actually an increasing shift towards niche labels out there, particularly by the sports fanatic, who's looking for outdoor gear, outdoor brands itself that goes beyond the North Face or Columbia that we are familiar with BF. And then, of course, notwithstanding our T-Rex. That's actually, I would consider, a higher end brand, and particularly doing actually very well here in Asia. And because of the price points and for the fact that, it is a niche brand, what Antasport has actually been doing over the last 4 years since they've actually acquired the company was to slowly but surely expand the merchandise offerings. So we're looking at, more apparels, going into the shoes as well. So expanding the merchandise offerings is definitely a key to actually growing this business.
Catherine, so is the company's pitch here in coming private that, hey, we have some market share gains in China, that's where our growth is? Is that kind of their pitch?
I believe they have their eyes beyond China. And this is really key to establishing, your international brands. So this is going beyond, the Chinese brands that the company had actually made a bit splashed at home with. That's the Antasports brand. And let's take a step back. Antasports, they made a name for themselves. They've established themselves being now, I believe it is, the 7th or the 8th year to which they are the official sponsors for the Chinese Olympic Committee. So, they are now very well associated among the Chinese, but the company has obviously bigger goals to which they are looking to actually have a portfolio of established labels that goes beyond, your homegrown brands, but the higher, pricier brands are T-Rex, Solomon, even Wilson. And I do believe that, they will be rolling out plans for Wilson to be beyond basketballs, rackets that we have seen. They've actually talked about it back in 2019 when they first acquired the company, that they will be looking into apparels for Wilson. Let's see what happens, when Irma makes a successful IPO.
Wilson makes pickleball rackets as well now.
Oh, that's a growth business.
Yeah.
Yet to play
I think so for sure.
Yet to play it.
I was playing yesterday.
Nice. Hey, Catherine, I'm looking at the some of the comps and how the stocks have done. I mean, it's kind of all over the board. Adidas is up 37% year to date, but Nike and Under Armour, they're down 15 to 30%. How do the comps look here? How's the valuation here? How do you think this company should be positioned within the group?
Well, I think general sentiment-wise, obviously, we are seeing growing concerns about global demand, the sentiment wise towards the discretionary goods. And that's what you've probably been seeing, reflecting in the prices of Nike and VF. Now, Adidas is a bit of a different thing because, again, the company has actually gone through major changes, including a new CEO, and they are actually picking themselves up from what I would say the low, to which, take a step back. Remember last year they lost Easy, the partnership, and then, or rather, they terminated the Easy partnership. They relooked at their inventory situations, and they've actually realigned it along with what they've set themselves going forward. So it's a bit of a different story. It's like a turnaround, if you actually call it. So I think it's very mixed right now. Clearly, there are eyes, and I would say that what we've actually touched on, one of the growth catalysts will surely be coming from China. And, when the sentiment actually turns for China, fingers crossed on that one, you might actually see a more exciting story for Irma.
Interesting stuff.
Yep, great stuff. I mean, hey, we got an IPO. That's exciting in and of itself. And then when you talk about some of the cool products they have, it makes it even more interesting. Catherine Lim, thanks so much for joining us. Catherine Lim is a senior analyst. She covers the consumer and tech space, and she's head of Asian equities for Bloomberg Intelligence. So we appreciate getting some of her time. She was formerly at Credit Suisse and Citi, so we appreciate that she's now at Bloomberg Intelligence. We got some time there. So again, some IPO market maybe opening up a little bit. We've got this one. We've got ARM, and a lot of folks are saying we're going to see a little bit more IPO activity here for the remainder of 2023, which has been a very quiet year so far to date in terms of new equity issuance. We'll see if that can pick up here in the back half of the year. This is Bloomberg. Let's get some company news right now with Lisa Mateo.
Good afternoon, Paul. Goldman Sachs could let go of underperformers as soon as next month. That's according to the Financial Times. Bloomberg's Sonali Basak says it's a wake-up call for the firm's rivals.
They have cut thousands of jobs. It has been a tough year. You're watching a year where Goldman Sachs and other banks also are facing their returns on equity under pressure. We are weeks away from a third quarter print. They have made massive changes to their consumer business, and this looks like a lot of housekeeping coming early to start 2024 quite fresh.
Checking the shares of Goldman Sachs right now, they're up about 0.7%. Well, healthcare plans are already a big expense for companies. A new study says it's about to get more expensive, rising 5.4% per employee next year. Bloomberg's Steve Potisk has details.
According to a nationwide survey by professional services firm Mercer, that number would have been 6.6% if employers didn't make changes designed to rein in costs. Still, the companies surveyed have not introduced major cuts and don't intend to increase employee share of the cost. But employers say monitoring and managing high-cost claimants will be a top priority over the next 3 to 5 years.
Now, the main reason for that rise, hospitals' high labor costs and also strong demand for new and expensive diabetes and obesity drugs. And as the NFL season kicks off, Amazon and the National Football League, well, they're taking a hit. The Wall Street Journal reports Nielsen won't include viewership data for Thursday Night Football from Amazon's Prime Video streaming platform. For now, they say it wasn't approved by the independent body that's in charge of setting those measurement standards. Shares of Amazon are up 0.5%. I'm Lisa Mateo.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 12:21 on Wall Street. We do check markets all day long here at Bloomberg. We've got the Dow, the S&P, NASDAQ, and the NASDAQ 100 index, and yes, the Russell 2000 all in the green. Stocks are pushing higher with the S&P 500 index seeing an advance after a 3-day drop. S&P right now up 17 points, up by about 0.4%. The Dow up 104, higher by 0.3%. The NASDAQ Composite Index is up 64 points. That is a gain of 0.5%. A rebound for Apple shares today. Apple up by 1.3%. 10-year yield 4.24% with a 2-year that's yielding 4.96%. Spot gold at $19.19 the ounce. Gold now lower by less than 0.1%. Little change, down 60 cents. West Texas Intermediate crude up 1.2%. $87.94 a barrel. Brent holding at $90.97 a barrel, up by about 1.2%. Kroger and Albertsons have agreed to sell 413 stores to C&S Wholesale Grocers in a divestiture designed to help win antitrust approval for their $24.6 billion merger. Now, shares of both companies are higher. Kroger up by 3.9% and Albertsons pushing higher by 3.2%. Again, recapping, stocks are higher with the S&P up 18 right now, up by 0.4%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie Tucker, thank you so much. We appreciate it. Good stuff. Matt Miller, Paul Sweeney live here in our Bloomberg Interactive Broker Studio. We are also streaming live on YouTube, so head over to youtube.com and search Bloomberg Radio. It is Friday. It is the time to ask, what is Matt Miller driving? I really don't know, and quite frankly, I'm not really that a super car guy, but our next guest is Michael Dean. He's a senior analyst covering the European automotives for Bloomberg Intelligence. I can't believe we actually pay this guy to do this because we could get it done for free. He would do it. That's
I'm
how much
glad
of a
we
car
pay
guy he
him
is.
because I think he takes all of his paycheck and buys new cars.
And buys new cars.
Yeah. A lot of people who cover cars don't really care about cars, but Michael Dean does, which is why we love having him on. Michael, I want to get first your thoughts on this beast of a car. I've been talking about it for most of the show already. It's the Aston Martin DBX 707 that I'm lucky enough to test out this week. 697 horsepower, 0 to 60 in 3.1 seconds, even though it weighs 5,000 pounds. What's your take?
Yeah, it's a great car. It sounds good. It's got the performance. So it's the fastest luxury SUV out there. It's even quicker than the Ferrari pure sine wave, which is double the price. And it makes up 70% of the mix of DBX sales. So it's a better price point, it's a better car, and it's selling well for Aston Martin.
So I haven't driven the new Ferrari yet. Well, I don't know if I will. That's kind of like a different level, and they're very difficult to get.
Maybe Michael Dean can help you out. Maybe.
Hannah Elliott has. Michael, have you driven the new Ferrari? I don't want to get sidetracked, but.
No, I've been in it. I haven't driven it, but Hannah Elliott has, so we'll have to ask her.
She has like better access than anybody, and she's driven this Aston a few times. I have to say, I absolutely love driving it.
Okay.
Now it has different modes. You can put it in an all-terrain mode. It has a GT Grand Touring mode. It has Sport and Sport Plus. I think they're useless. You only need Sport Plus. Everything else sucks, and Sport Plus is the greatest experience you could possibly have in an SUV, at least in my experience. But it's frustrating in a number of other ways, Michael. There's no wireless CarPlay, which means I can't use Google Maps. I have to use their extremely dated navigation technology, which just doesn't work that well. If I do want to plug in my iPhone to the Aston Martin, it still has the old clunky USB ports. It doesn't have the new USB-C ports. So I don't have those old plugs anymore at my house. There's no touch screen, right? Now I know these are, for most people, it doesn't matter if you buy a car for the engine and to drive it, but honestly, on a day-to-day basis, if I'm spending $300,000, I want the best tech. Why can't they deliver it?
Yeah, maybe you're just being fussy, but no, it's true. When the competition has the high tech, so if you look at the Lamborghini Urus, it has a touchscreen, it has all the correct interface, it has the connectivity. And what happens is that Aston Martin uses Mercedes technology, but this is the old technology. So you'll have an updated version, probably about 12, 18 months, which will have a flat screen, which will have the connectivity, and also you'll probably have a plug-in hybrid option. So that is coming. But hopefully that doesn't take away the experience of driving the vehicle.
It doesn't at all, but there's certain... So it has these hydraulic struts in the doors. I've never seen anything like this. You can actually look at them when you open and close the door. We probably have video of it. That's supposed to make the doors, I guess, more comfortable and easy to use, but in fact, they're the hardest doors to open and close that I've experienced in almost any car in the last decade, which is weird. I do like it better than the Lamborghini Urus on almost every level, which says a lot because I'm a huge Lamborghini fanboy, but I think it looks better. It's definitely faster. I think it's more fun to drive. The transmission I like a lot better, which I guess is a Mercedes transmission as well, right? So in terms of the driving experience, I don't know if it can be beat. There's a new challenger in the class, actually a little bit lower, the Porsche Cayenne Turbo Hybrid, which is just coming out, that seems to be, at least on paper, as fast and like half the price. What do you think about that?
Yes, I'm with you. I think Aston Martin is my favorite brand as well, and the drivability is there. But also Porsche ranks pretty high on my best list. And I think the new Porsche Cayenne is an excellent vehicle. It has all the high tech. The engine is fantastic. And it will sell extremely well because it's at a better price point. So, yeah, they're doing well with the new Cayenne. There's no doubt about that.
Aston Martin stock is up 117% year to date. What's going on there?
Yeah, you've got to take into account that it's down almost 90% from when it IPO'd in 2018. So it's had a really tough time since it's come to the stock market. It's got a new set of managers. It's got some new investors. So Lawrence Stroll, he's the main owner. You've had Geely take a 10% stake. You've got the Saudi PIF taking a stake. So they're finally getting it right. They've got new products just being launched. So the new DB12 was launched this month. This is hopefully going to turn around the cash flow to be positive. It hasn't been positive in the years that it's been a listed company. And they have two other vehicles coming fairly soon. So they're on the right path. They've got enough cash to manage certainly for the next 6 to 12 months. And it's getting this free cash flow into positive territory that will be key to them in terms of their performance in the next 12 months or so.
We're showing the video of the car now, or we were for a moment. And if you go to youtube.com and search Bloomberg Radio, you can watch us streaming live. And guys, let's keep showing the video. It's about the car, right? Let's keep showing the car. One of the things that I thought that's a little bit disappointing for a car that, blows me away in almost every aspect from a driving perspective is the boringness of the engine layout. The Lamborghini Urus, the Mercedes AMGs, the Porsche Cayenne Turbo, the Aston Martin DBX, they all have a twin turbo, like 4-liter V8. What gives? Why not have a raging V12? In this sense, I think Ferrari tops everybody else, although obviously it's more expensive as well.
Yeah, the V12 6.5 litre that's in the pure same way is a special engine indeed. But the thing is, because Ferrari only makes less than 20,000 cars, it doesn't have to adhere to the same emission regulation that the likes of Porsche and even Lamborghini, because it's part of Volkswagen, has to. So they have the twin turbos to make them more fuel efficient. But hopefully that doesn't take away too much from the enjoyment, at least listening to the engine. I quite like the V8s in those vehicles.
It sounds delicious. In fact...
But we're not going to be able to say that for many more years, are we?
No, we won't.
And I don't know how you car guys, deal with that and accept it.
This is something that I was asking Michael Andretti yesterday. I've asked Lawrence Stroll as well.
Lawrence Stroll is like...
the owner of Aston Martin.
Owner of Aston Martin.
Or at least a huge chunk of it, and he runs their F1 team as well. What do you think, Michael? How does racing and how do luxury cars make this transition? I was test driving the BMW XM a couple of weeks ago, and the sound was really disappointing. And that has a V8, but it's a hybrid.
Yeah, I'm probably going to disappoint you and also my colleague Kevin Tynan in that I've actually bought a fully electric vehicle. So I've got the BMW iX50, and I've got to say it's awesome performance. But the one thing that is lacking is the engine noise, and it does make a difference, and it will put people off. The good thing for the luxury car makers, they've got an extended period of grace into which they can phase out their V12s. So the V12s will become V8s. The V8s will become V6s. So we'll still have a ICE, so internal combustion engine, in the luxury brands for many years to come, but they will be electrified in some way. And that's certainly going to happen with the Aston Martin DBX. It's going to happen with the Urus. It's already happened with the Bentayga, and as you mentioned, it's on the Cayenne. So yeah, we're going to have ICE engines for many more years yet for the luxury car makers, I think.
All right, Michael. Thanks so much for indulging my partner here in discussion of all things automobiles. Michael Dean, he's a senior analyst covering the European automotives. You mentioned Kevin Tynan. He covers the U.S. companies. So they're both super duper car guys, and
he mentioned the BMW iX, which again is on my list.
Is on your list. All right, Michael Dean from Bloomberg Intelligence. We've got somebody in Asia that covers the Asian companies as well. So we've got the global auto business absolutely covered from a Bloomberg Intelligence perspective. Right now, let's go to Nancy Lyons for World and National News down in D.C.
Thanks, Paul. President Biden is now in India, where he will be participating in the G20 summit this weekend. White House National Security Advisor Jake Sullivan spoke on Air Force One about the issues that will likely come up.
From climate to energy security to food security to global macroeconomic stability to being able to deliver public goods to people everywhere.
Sullivan says President Biden will also be meeting informally with leaders on the sideline of the summit. The climate is expected to be one topic to come up. A new UN assessment on global emissions shows countries are largely failing to meet their commitments, putting the planet on course for catastrophic global warming. The report released today says governments must rapidly find a way to cut billions of tons of carbon dioxide. Food experts agree the expiration dates we find on food may be doing more harm than good. We get more from Bloomberg's Amy Morris.
Cornell professor Martin Weidman tells the Wall Street Journal the dates are less about safety and more about rotating stock. Often the so-called expiration dates say things like fresh until, sell by, or best by, and perfectly good food gets thrown away. The Food Industry Association explains those dates have become less of a guide as was intended and more of a rule. And in the UK, where there's more of an effort to crack down on food waste, those dates have been eliminated. In Washington, I'm Amy Morris, Bloomberg Radio.
Top Defense Department officials are honoring those lost in the 9/11 terrorist attacks. Deputy Defense Secretary Kathleen Hicks posted an observance ceremony today in Arlington. Hicks says she'll be forever struck by the resilience her colleagues have shown following the attack on the Pentagon. Monday will mark 22 years since the attacks that claimed the lives of 2,996 people. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 12:40 on Wall Street. We do check markets all day long at Bloomberg. We are looking at a small gain for the S&P 500 index after 3 days of losses. The S&P right now up 12, a gain of 0.3%. The Dow up 86 points, up also by 0.3%. Nasdaq up 45, higher by 0.3%. And the Nasdaq 100 index, full of big tech names, including Apple, up by about 0.4%. Apple shares have rebounded today. They are up by 1.1%. 10-year yield 4.26%, with a 2-year that's yielding 4.97%. Gold is down 0.1%, $19.17 the ounce. And West Texas Intermediate crude oil is up 0.9%, $87.61 a barrel. Brent, the global benchmark, is holding above $90 at $90.73. Quincy Crosby is chief global strategist at LPL Financial, and right here on Bloomberg Market, she says when you look at market volatility, you've got to consider the calendar.
It was pre-announced that we were going to have some bumpy rides in August and September. And then when it happens, everyone starts wondering, well, wait a minute, maybe this is worse than just a bumpy ride. But statistically and historically, when you have such a terrific start to the year, you should have a strong end to the year, too.
And you can hear more of that conversation on the Tape podcast. You can download it wherever you get your podcasts. Again, recapping, stocks are higher. Apple leading the advance, up by 1.1%. S&P up 14, up by about 0.3%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie Pell, thank you so much. We appreciate it. As always, Matt Miller, Paul Sweeney live here in the Bloomberg Interactive Broker Studio. We are actually streaming live on that YouTube thing, so head over to youtube.com and search Bloomberg Radio. All right, a real treat here. We're talking serious trading here. Now, we booked this guest to talk about the markets, but quite frankly, we got a lot of markets guests on the week. So let's talk about some real trading in the pits. JJ Kinahan joins us. He's the CEO of IG Group North America. Joins us live here in our Bloomberg Interactive Broker Studios. He is from Chicago, and that kind of goes to the story here. JJ, thanks for coming into the studio here. Chicago Board of Options Exchange, CBOE. What is it, and what did you do there?
So I traded there from 1985 till 2006. And I traded in what, at the time, everything was open outcry, people jumping up and down and yelling and
That's what this whole hand signals
all the hand signals, so you'd be someone way across, you'd be checking, check a trade, I bought 20,
right,
paid 30 for it, whatever it may be. And it was a wonderful way to make a living. It was very, at the time, incredibly efficient.
Right.
Obviously, electronic trading is much more efficient, and it's been the greatest thing that's ever happened to retail traders.
Yep.
But there were 550 people in there leaning on each other, spitting on each other, yelling and screaming. It was kind of fun, even if you didn't know anything. If you didn't like the person you stood next to, you knew everything about them because you stood next to each other for 6.5 hours all day, every day. And I feel very fortunate, Paul, that was part of my background. I met some of the greatest people in the world.
Yep.
And the one thing I will say was the greatest trait there is your word was your bond. If you said buy them, you bought them. If you said sold, you sold them. And if you didn't do that, you were quickly found out and outcast. And so, you think of the millions, hundreds of millions of dollars that went through there every single day, and it went through on people's words. And that was really special.
And so, in Chicago, when I think of some of those, screaming in the pits, I think Chicago. So there's a community there, right? Kind of everybody and that kind of thing.
Yeah, and what's ended up happening is a lot of us have ended up on the retail side in brokerage, and many have ended up still on the trading side with some of the bigger firms. And so it's really helped in terms of the relationships we have. And as we were building, I went on to Thinkorswim at the time. We built that platform. We kind of built it for ourselves.
Yep.
And then, ended up selling it to TD Ameritrade, then started with Tasty Trade, same people who built Thinkorswim to begin with. And so I've been fortunate. I've worked with my friends my whole life.
Right.
I've worked in an industry I absolutely love, and I went from the part of the business where it was all about me to now at Tasty Trade, it's all about helping other people understand the markets and what we did, and it feels really good to do that every
So how do you, all right, so you go from trading in the pits back in the 80s and 90s, how are options and other securities that you deal with, how are they traded these days?
Well, everything's done electronically. So if you put in to buy something, if you went in to buy Apple right now, and the at the money call in Apple, in the front month, you would get filled in, before we could blink our eyes.
Yeah.
It's really amazing how quick the electronics work, whereas back when I was in the pit, you might not know what you did for 10 minutes.
Okay.
And that's why there were something called runners. They literally ran back and forth from the pit to the, that's where everyone started. You just ran back and forth all day long. You were in great shape. It was a young man's game at the time.
Exactly. I bet.
But, so I just think that everything that's happened in our business since I started in 85 has been to the benefit of a retail trader. Everything about it has evened the playing field so that, the platforms that we produce today are so much better than anything I ever had in the pit. And the information flow now is better for you sitting at home in front of your screen than it is for now. There are still a few pits left. They don't have the information flow you have at home.
All right. So, does that lower the cost for the average investor?
You think about this. Most equity trades are zero now, right?
Yeah, that's
so,
right.
think about from that point of view. Again, platforms, the education, we spend, almost 10 hours every single day on our Tasty Live side, broadcasting live about, you guys are doing a lot of news, et cetera.
Yep.
We're doing some of that, but what we're doing more is talking about strategies, about how to learn, about how to think about risk, because the biggest thing that the average person at home doesn't truly understand yet, I shouldn't say doesn't understand yet. Newer people particularly, and as you go up, what I love about the market the most, it humbles, as you know, from your background, we started in the business at almost the same time, is it humbles you every single day. And you can take losing days, you just can't get blown out. And understanding how risk works is the biggest thing the average person has to do if they're going to have success long-term in the markets.
So what is your platform now? IG Group North America, what are you?
So IG is the parent company out of London. We're listed on the London Stock Exchange and our IGG. And Tasty Trade is our brokerage firm in the U.S. And so, at tastytrade.com. And anything I can help anybody with, JJ at tastytrade.com. But, all that, we want to provide, we're kind of a fintech company. We consider ourselves. We build great platforms that incorporate anything a retail trader would need so that they can interact with the markets in a way that hopefully is simple for them to understand. And also, if they want to just trade equities, wonderful. If they want to be somebody who trades futures with options, et cetera, we have the tools for that.
So your audience is primarily retail?
Our audience is 100% retail.
100% retail. Okay. So, but for the institutions, how do they trade? I mean, do they like in my day? If I had to buy 300,000 of Pan Am, I'd go see who owned Pan Am, and I'd start bidding them for it. Now it's. You go to Citadel or you go to some of the other?
So, the Citadels, the Virtus of the world, they have a market-making business.
Yep.
So they'll take the other side of anything anybody wants to do, and they operate on volume and they operate on speed. They provide a very important function for the markets, and I think it's sometimes underrated what the market makers do. Maybe I'm a little biased because I started my career as a market maker, but, if somebody wants to come in and sell, you'll buy them. Somebody wants to come in and buy, you'll sell them, and you do that all day, every day. You take advantage of a little bit, a small spread, which is very small, but outside that, you're putting on positions all day, which help you make money also. Now, when somebody comes in with a big block to buy, they may call around still. That market still exists, because think about it, if you're on an electronic screen and the market, many people see it like 10 by 10, which usually means 1,000 by 1,000, 1,000 to buy, 1,000 to sell, and all of a sudden you see like a 3,000 number up there. Somebody's got 300,000 shares to buy. Obviously, it's going to tilt the market. So that's why when people hear about all the algorithms and stuff, they may say, "Oh my God, that's terrible. They're using them." They actually serve a function, and that is so that firms don't have to necessarily tip their hand when they do have big blocks to buy. They can buy them in smaller amounts without actually making the market go crazy one way or the other.
All right. So if I walked onto a Goldman Sachs trading desk, it wouldn't look anything like back in the day, right?
It still would look like it did. There'd certainly be a lot less people.
Okay.
Absolutely. And the the amount of technology they're using is absolutely amazing.
Yeah.
Overall. And back when you were on the desk, you might have had somebody, Paul might have been responsible. I believe you used Pan Am as an example.
Airlines,
for Pan Am, or for the airlines, we'll say. Now, you may have one person in charge of 100 different stocks, et cetera. They're keeping track of everything on there. So we've used technology to the advantage of everyone.
JJ, thanks for coming in. Fascinating.
Thanks. It was a lot of fun.
JJ Kinahan, he's the CEO of IG Group North America, talking a little bit trading down in the pits. This is Bloomberg. Let's get some company news right now with Lisa Mateo.
Thanks, Paul. A big move in the grocery space. Kroger and Albertson have agreed to sell 413 stores to C&S wholesale grocers. Bloomberg News retail reporter Brendan Case explains why.
They are doing this because it's part of their effort to win FTC approval for their $25 billion merger. Kroger and Albertsons had announced the merger almost a year ago now. The big question is whether it gets antitrust approval. This is a major step in that direction. Whether authorities will approve the deal remains to be seen.
Now, this news comes as Kroger agreed to pay up to $1.2 billion in a nationwide opioid settlement. Shares of Kroger right now, they're up more than 3.5%. Albertson shares are up 3.5%. Elon Musk's SpaceX is being ordered by the FAA to take corrective action after a mishap with the test of its Starship rocket back in April.
The entire Starship stack continuing to rotate. We should have had separation by now. Obviously, this is does not appear to be a nominal situation.
Now, that was sound from that flawed launch. The FAA says in order for SpaceX to get another permit, it needs to redesign its hardware to prevent leaks and fires, among other things. It's citing a total of 63 actions that must be fixed. And the Barbie movie has pulled in close to $1.4 billion in global ticket sales, and Mattel is getting its cut too. Its CFO says that the toy maker expects about $125 million in revenue related to the movie as it licensed its Barbie brand to Warner Brothers Discovery. Shares of Mattel right now, they're down just a fraction. Those are the company stories. I'm Lisa Mateo.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
All right, Matt Miller and Paul Sweeney here in the Bloomberg Interactive Brokers studio. Looking at the markets here, just a little bit of a gain eking out here. We've got about 0.2% gain on the S&P 500. Same for the Dow, NASDAQ, same as well. So there you have it for the equity markets. On the yield curve, just a slight move up in yields. We got the 10-year 4.25%. We are on a 5% watch again for the 2-year, 4.97. We'll call it there. And WTI crude oil having another up day, now at $87.54 for WTI crude. Let's head down to Washington, D.C. right now. Why? Nancy Lyons has got world and national news for us.
Thanks, Paul. President Biden is in India for the summit meeting of 20 major economies, while Treasury Secretary Janet Yellen has been conferring one-on-one with finance ministers. Bloomberg's Irv Chapman has more from Washington.
Yellen is seeking to increase the financing of the World Bank and other international agencies, plus reducing the debt burden on poor countries. She was asked her view of the world economy.
I've personally been surprised by the strength of global growth and how resilient the global economy has proven to be. The most important thing we could do for global growth is for Russia to end its brutal war on Ukraine.
Yellen said she's confident the U.S. Congress, with bipartisan support, will supply additional aid to Ukraine. In Washington, Irv Chapman, Bloomberg Radio.
Former House Speaker Nancy Pelosi is running for re-election. The 83-year-old California Democrat officially announced today she will run for another term in 2024. She's been serving her California district since 1987. The FAA is ordering SpaceX to make fixes after the flawed launch of its Starship system back in April, which forced the company to blow up the rocket shortly after liftoff. Bloomberg's Erica Herskowitz is following developments.
The regulator says the company needs to, among other things, redesign its hardware to prevent leaks and fires. It cited a total of 63 actions in need of remedy. SpaceX must implement all corrective actions that impact public safety. It must also apply for and receive an FAA license modification that addresses all safety, environmental, and regulatory requirements prior to the next Starship launch.
Bloomberg's Erica Herskowitz says during April's failed launch, the launch pad was damaged and debris was spread over hundreds of acres. SpaceX says it learned a lot from the vehicle and ground systems during that first flight test. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons. Now back to you, Paul and Matt.
All right, Nancy Lyons, thank you so much. We appreciate it. And well, here's a story that grabbed my attention. Investing in royalties on tracks by the Beatles and Celine Dion has netted a fortune for a former Bear Stearns analyst, Josh Grush, who's 49. He stands to pocket almost $15 million after the takeover of Round Hill Music Royalty Fund, which he founded in 2010. The fund on Friday agreed to be acquired by Alchemy Copyrights LLC, trading as Concord, in a deal worth $468.8 million. At the agreed takeover price of $1.15 per share, Gruss's 3.15% stake is worth $14.8 million, according to data compiled by Bloomberg. His father, Martin, known for his time as a former Wall Street hedge fund, Gruss Capital Management, he also holds a stake of a similar size, the data show. A spokesperson for Josh Gruss declined to comment. Josh Gruss worked as an analyst at Bear Stearns from 1999 to 2001 before becoming a partner at Gruss & Company, and that's according to his LinkedIn profile. Round Hill's music portfolio contains more than 120,000 songs, including the Beatles' She Loves You and The Twist by Chubby Checker, according to the company's website. The roster also includes Meatloaf's 1990s number, I Do Anything for Love, But I Won't Do That, and more recent hits such as Marry Me by Bruno Mars. So more artists making money off of their copyrights. And so we've seen a lot of those transactions in the marketplace over the last couple of years. Looking at the markets today, S&P 500 up 0.25%, same for pretty much across the board. Looking at the various indexes here, WTI crude oil, it's higher, $87.50. We keep an eye on that. The dollar pulling back a little bit here. The Bloomberg Dollar Index off just a little bit here. We'll keep an eye on that. Sound On with Joe Matthew in Washington, D.C. That starts right now.
Now, from our nation's capital, this is Bloomberg Sound On.
We're talking about red and blue division within states. How busy is Donald Trump's legal team going to be? Is the economy stupid? Is that actually what will decide this race?
Bloomberg Sound On. Politics, policy, and perspective from D.C.'s top names.
Federal spending combined with too lax monetary policy has produced this 40-year high in inflation.
China policy is driven basically by domestic politics.
American families are finding themselves further behind the 8 ball. To get anything done in this Congress, it's going to have to be done in a bipartisan way.
Bloomberg Sound On with Joe Matthew on Bloomberg Radio.
The Georgia grand jury recommended indicting Lindsey Graham and Michael Flynn along with Donald Trump. And Nancy Pelosi says she's running again. Welcome to the fastest show in politics as we spin plates on several breaking stories today. We'll discuss them in just a moment with Bloomberg Washington senior editor Wendy Benjaminson. And with crude oil today rising closer to $90 a barrel, we'll step into the oil patch and get insights from Bob McNally at Rapidan Energy Group. He's back with us today as the Strategic Petroleum Reserve sits near a 40-year low. Later this hour, the issue of migration reaching a boiling point in New York. We'll dig into it with analysis from our panel. Bloomberg Politics contributor, Democratic analyst Jeannie Shanzano is with us today, along with Maura Gillespie, Republican strategist at Blue Stack Strategies. We're live on the radio and YouTube, so let's get started, as always, with a look at Wall Street. On the markets today, Charlie Pellet. Hey, Charlie.
Hi, thank you very much, Joe Matthew. And up Friday for the Dow, the S&P and NASDAQ. Holiday shortened trading week. You mentioned crude oil, so let's begin there because you got more coming up on crude on Sound On. West Texas Intermediate up 0.7% right now, 87.45. Brent crude right now above $90 a barrel, 90.65 on Brent. The global benchmark up by about 0.8%. Oil on track for a weekly gain after supply curbs from OPEC plus leaders Saudi Arabia and Russia were extended for the rest of the year. Here's where we stand in terms of U.S. equity markets. We have got the S&P 500 index, little change right now. It's looking at a small gain of 0.2%, up 9 points at 4460. Most likely will end the week below 4,500 on the S&P. The Dow up 68, gain there of 0.2%. NASDAQ up 29, a gain of 0.2%. 10-year yield 4.25% with a 2-year at 4.97%. And spot gold, little change, down 50 cents the ounce to $19.19. That is a drop of less than 0.1%. Bottom line here, U.S. stocks on track for a losing week. Jonathan Stubbs is equity strategist at Berenberg, and this morning on surveillance, he told us he is steering clear of buying on a pullback.
We're in a brave new world, as we call it, and there's lots of sort of shifting sands. I mean, pretty much every investment decision has politics, geopolitics involved, just as one element. But yeah, we've always sort of seen a pullback as sort of 5%, maybe a little bit more, a correction, 10, 20%, and beyond that, you're into sort of bear market territory. So these markets could easily be ripe for certainly a pullback, and maybe more than that.
Politics and geopolitics, what we do on Sound On. By the way, you can hear more of that conversation on the Surveillance podcast. You can download it wherever you get your podcasts. A source tells Bloomberg Goldman Sachs is planning its annual cut of underperforming workers beginning late next month. Goldman Sachs shares are up right now by 0.8%. Recapping, stocks higher with the S&P up 9, up 0.2%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, we thank you and happy Friday, sir. Thanks for kicking things off for us, and welcome to the Friday edition of Bloomberg Sound On. We're live on the radio and invite you as well, as always, now to join us on our YouTube simulcast. You can jump in studio with us here and see what we're cooking up. Just go to YouTube, search Bloomberg Global News. So I didn't think we were going to be starting with this today. Didn't seem like it would be that big of a story, but how about this headline out of Georgia? The Atlanta grand jury releasing a 28-page document. This just made public today. I hold in my hands. This is the grand jury that, of course, already indicted Donald Trump and 18 others. Well, they had bigger plans at one point. The grand jury also recommended indicting Senator Lindsey Graham, we have learned, and former National Security Advisor Michael Flynn. This would be like if they were indicting Jake Sullivan here in the current administration. And that is not all, by the way. David Perdue and Kelly Loeffler, former U.S. senators, Republicans from Georgia, along with Cleta Mitchell, the former Trump lawyer, participated in his perfect phone call. So what happened to all of them? Are they talking with prosecutors? That's where we begin right now. On a breaking news Friday, we also have news out of California that we'll get to with Wendy Benjaminson. Nancy Pelosi is running again. Who says there's no news in the dog days of summer in Washington? Wendy's with us right now, and happy Friday, Wendy. I wonder your insights. Let's pick through both of these. These names jumped off the terminal when we saw them. Senator Lindsey Graham, what does this suggest about their station in life right now from a legal standpoint? If they were not indicted, what are they doing?
Well, they certainly are celebrating that they dodged a legal bullet, not a real bullet, obviously, but a legal bullet in escaping criminal charges. It could mean one of two things, and I just want to say off the top here, I am speculating. I haven't talked to anyone about this yet, but it's possible they were already cooperating, and Fani Willis, the prosecutor down there, decided not to indict. More likely, considering they were, one is a sitting senator, the other one was a high-ranking White House official, and the other two were senators, that she just decided it wasn't worth the hassle, if you understand what I mean, because she would have, if they were acting in their capacities as federal officers at the time, which is something that Mark Meadows, this former chief of staff, is arguing right now, then the case would have to be moved to federal court. And once it's in federal court, there's, it's obviously more complicated for a Georgia prosecutor to do the case. The other interesting point about this is that the special grand jury, that's what came out today, the report of the special grand jury, which recommended charges, they also did not suggest that these should be charged under the RICO, Racketeering Influence and Corrupt Organization Act, that Fani Willis eventually did charge them under. That is a set of charges, an approach to charges that she uses against gangsters, drug dealers, once against teachers, and now against Trump and his cohorts. So they were just thinking obstruction of justice or other related charges.
Well, we haven't heard from Lindsey Graham or Michael Flynn yet. I suspect we will. I'm waiting for an emotional appearance potentially on cable news, but we'll let that breathe. It's just interesting, Wendy, because Fani Willis was being accused or criticized, maybe a better word, of overreach, that this was not as an efficient approach to the case as special counsel Jack Smith had taken here in Washington. But we understand now she could have actually bitten off even more. The other big breaker I need to ask you about, and maybe you saw it coming, Wendy, news from California, Nancy Pelosi. She's running.
While extremists push a national abortion ban and undermine privacy rights, I'm fighting for reproductive freedom and marriage equality. I'm running for re-election to continue our fight to improve people's lives and defend our democracy. And I respectfully seek your vote. Thank you.
I respectfully seek your vote, says the former speaker. That's from a video presentation that went up on her website a short time ago. Wendy, a lot of folks thought she was about to pack it up. A recent story from Jonathan Martin at Politico would suggest that they were just about done, that she and her husband were not interested in pursuing, for instance, an ambassadorship to the Vatican, which had been floated for her. Are you surprised by this?
Not as much as I might have been a year or so ago, but remember, her husband was viciously attacked in their home in San Francisco by a guy who was trying to, he's a crazy guy, but a guy trying to get to her and ended up beating her husband with the pipe or some large object. She's 83, he's in his 80s. So that wasn't great. The other, I think she also does feel like there's room for Democrats, although in her district, there's no question another Democrat would have taken her place. I also think this has to do with Dianne Feinstein, the 89-year-old senator who is clearly having memory problems, who is clearly having trouble focusing on her job. And Nancy Pelosi's position through this whole will Dianne Feinstein retire business or not is that it was sexist to suggest that Dianne Feinstein should retire, even though she's 89 and clearly infirm mentally. Nancy Pelosi said, you would never suggest that of a man, which was proven wrong last week by the furor around Mitch McConnell. But I think Nancy Pelosi is saying, yeah, I'm 83, I'm a woman, and I'm running again because, look around. I'm in the mid-range of age for members of Congress these days.
That's quite a statement, Wendy. This is great. Appreciate the clutch analysis here. Wendy Benjaminson, who we turn to so frequently on this program for insights. Thank you, Wendy, and have a great weekend. Bloomberg Washington senior editor. You know what else I've got my eyes on today is the price of oil, and you probably do too, as we inch ever closer back to $90 a barrel. WTI, Charlie Pellet just told us, 87.50 roughly right now, and there are a lot of questions about what's going on here with supply and demand as Saudi Arabia starts to turn the screws here a little bit more to try to keep prices sustained, and maybe they're about to go higher. We know that we have a 40-year low, meantime, on the Strategic Petroleum Reserve. And crude oil was at $60-something a couple of months ago. Did we just miss a huge opportunity? You know who's back to talk is Bob McNally. We always love talking with Bob, the founder and president of Rapidan Energy, former senior White House policy official. Bob, it's good to see you. Welcome back to reality post-Labor Day. What are we in for here with crude prices in the weeks ahead?
Hi, Joe. You know, I think we're moving higher. We've been predicting that for
Bob,
quite a while.
We're
not the only ones.
That's something on our end here. I can't hear Bob.
Testing 1, 2.
There we go. Take it away, my friend.
All right. Okay. Yeah. Hi, Joe. Yeah, we see prices going higher. I don't think we're the only ones. We see big deficits here. You don't need gangbuster demand. It's just resilient demand. China is pulling in oil to store it, and its demand isn't that bad, 16 plus million barrels a day. U.S., decent demand growth. Gangbusters, no. India, pretty strong. The monsoon's messing things up a little bit. So you got resilient demand. And then you have these big cuts, Saudi Arabia especially, and Russia, and OPEC plus, core OPEC plus. So we see deficits. Deficits are going to show up in inventory draws, and the market's in see it to believe it mode, right? They're like, no, we're not going for this. We got head faked last year with Russia. We're not buying it. There's a lot of China risk, macro risk. Fair enough. So the market wants to see the whites of the eyes of stock draws, and they are seeing those now. And so we're moving higher, and we think there's higher to go still. We'd be well into the 90s. Wouldn't be surprised at all if it touches 100, and if gasoline prices, national average, get back to closer to $4 than the $3.80 they are now. And this is, Joe, this is double jeopardy for President Biden. I worked in the White House. No president, Republican, Democrat, likes higher pump prices, and any president owns it and suffers from it. And so it's bad enough. Approval goes down, consumers are angry. But now the price increase threatens to derail the soft landing that everyone was hoping for this summer. So there's even bigger stakes than normal. So the stakes couldn't be higher for the White House here.
We're at 87.5 today. This is WTI crude. We topped out just above $92 a barrel in October, and we had a low in the mid-60s. That was in March, $66 a barrel. Did we miss a huge opportunity to refill the SPR, Bob, or is it not as simple as that? I know we have to go through a bidding process, and you can't just start buying barrels.
Yeah, unfortunately, the the Department of Energy was limited somewhat logistically. They're working on caverns, and they have to repair them and so forth. So there were limits on how much it could physically take in. And you got to remember, Congress, in its wisdom, I say, not too seriously, but in its wisdom, was ordering stock draws. We were selling off the SPR, and you can't refill the SPR until you stop selling the SPR. So, look, I'm not a fan of the big 180 million barrel draw that President Biden did. However, to be fair, they only really could start filling in the summer. They did so. They did it on a limited basis, and then prices now got away from us, and they stopped the refilling. So we had our moment, and unfortunately, really couldn't fill faster.
Jennifer Granholm told Congress, I believe it was back in March, if not April, that it would take years to refill, and in fact, wouldn't really be happening until a second Biden term. Is that how you see it?
I think so, and I hope, who knows if we'll ever refill it. You got to remember, Congress, on a bipartisan basis, wanted to sell the thing off. We were drawing it down to pay for non-energy expenses. And to really fill back up to the top, you'll need to appropriate new money. You have to ask Congress to actually vote on new funds, right? And that is very unlikely. I mean, there are a lot of other competing needs for that. And there's a lot of folks on the Republican side and the Democrat side who think, we don't need such a big SPR. We don't need 700 million barrels. We're a net exporter now of total oil. We're the largest producer of oil. So it's not like the 80s. So I'll be surprised if we ever do refill it, I have to say.
That's remarkable. All the while, Vladimir Putin and Crown Prince Mohammed bin Salman are praising joint efforts to stabilize the global oil market. Are they laughing at us right now?
No, I know there's this narrative out there that Saudi Arabia doesn't like Biden, and certainly Putin doesn't, and so they're going to jack up oil prices and kick him out of office. I don't buy it. I don't think that's their motivation. I do think oil prices are moving higher. Look, the Saudis, playing games with the market, trying to jack up the oil price, putting in a deficit just to for political spite or political reasons is very dangerous. It's sort of like you don't like the guy next door, so you start a fire in his apartment, but then the fire could burn your apartment down too. If they got an oil price spike, a sustained large spike above 100, I don't think they want that. Why? Because it would send then oil prices down. Spikes lead to collapses and busts. The oil market is, they take it very seriously. I think the reason they're cutting is they're afraid of a repeat of 2008, Joe. They're afraid of one day we're at $140 a barrel, everything's fine. Then a bank goes poof, and suddenly we're at $30 a barrel. There's a collapse, and a lot of folks are afraid about that. So I think they're taking out insurance against a sudden implosion in economic activity, probably due to financial contagion. They're going to wait to see these stock draws. That'll show them that the market's not experiencing that demand to collapse. And then I think they're going to put the oil back in, and prices should moderate at that point. I think we go higher, but I don't think they're all about playing political games here. It's just too dangerous with the oil market. The Russians, if they could, they'd probably try and do it, but not the Saudis.
Yeah, sure. Though you are suggesting that we could hit $100 a barrel, so that may be out of everyone's control if that's the case. If we do hit 100, does that then lead to massive declines this year? Is that the rest of your forecast?
Well, we do see it coming down a little bit into next year. So we think we're gonna get to the mid 90s on a quarterly average for Brent. So easily could see 100 print here and there, right? And then we think OPEC Plus will begin to add the supply back to the market. And assuming a healthy economy and so forth, and we're going to get some more U.S. supply, we're going to get some more Guyana. We think the market could stabilize maybe in that 80 to 90 range next year if all goes well. But I think we're going to have to go higher first.
Fascinating news, always. Great analysis, Bob. Thank you so much for being with us, and don't be a stranger. Bob McNally at Rapidan says we could hit $100 a barrel again. Gas prices could get closer to $4 a gallon. We'll keep tabs on these, of course, as Joe Biden heads for the G20, something we'll talk about a bit later. The panel's coming in next. Jeannie Shanzano and Maura Gillespie on the fastest show in politics. I'm glad you're with us. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 1:21 on Wall Street. We do check markets all day long here at Bloomberg. Developing story and just getting word that Barclays is preparing to cut hundreds of jobs as soon as next week as the firm looks to trim costs amid quieter markets. We're looking at stocks higher across the board, on track, however, for a losing week for the S&P 500 index. Right now, the index is at 4463, up by about 0.3% right now, higher by 12 points. Dow Jones Industrial Average up 107 points. That is a gain of 0.3%, while NASDAQ is up 47, a gain of just about 0.4%. 10-year yield at 4.25% with a 2-year 4.97%. Spot gold down 60 cents the ounce to $19.19. Little change there, down less than 0.1%. West Texas Intermediate crude up 0.7%, 87.48 for a barrel of WTI. Kroger and Albertsons have agreed to sell 413 stores to C&S Wholesale Grocers in a divestiture that is designed to help win antitrust approval for their $24.6 billion merger. Kroger shares up 4.1% right now. Albertsons up by 3.3%. Recapping, stocks are higher. S&P up 12, up 0.3%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
This is Bloomberg Sound On with Joe Matthew on Bloomberg Radio.
So the grand jury in Atlanta that initially investigated allegations of election interference by Donald Trump and those who became his co-defendants had recommended that it be made public, that their recommendations to the DA be made public. And it took a bunch of news organizations, including Bloomberg, to make it happen. It has been unsealed today. 28 pages made public. And by the way, as I hold them here in my hands, you can read the full unsealed grand jury report right on the terminal if you want to play along on your home game here. We weren't sure if this was going to be terribly newsy, but the names that we're reading certainly are. This is the first of two grand juries. They recommended indicting Senator Lindsey Graham and Michael Flynn, the former national security advisor to Donald Trump, along with others, including two former U.S. senators, David Perdue and Kelly Loeffler. This is where we start with our panel today. Very curious to hear from Jeannie Shanzano, Bloomberg Politics contributor, Democratic analyst as well. Joined today by Maura Gillespie, the founder of Blue Stack Strategies, former advisor to Speaker Boehner and Congressman Adam Kinzinger. It's great to have you both here. Maura, I'm going to start with you on this one. I just wonder your thoughts when you see names of Republicans like Lindsey Graham coming off the page here and what this might mean for the way Americans and Republicans are looking at this indictment now.
I truly do think that Republicans, especially some of those who support the former president, but even some who may not say it publicly, are wondering, is this pushing beyond the bounds? And wondering, how far-reaching this, indictment process is going to go. Because is the goal here to have accountability and hold people responsible, or is the goal here to get to Trump and kind of compel people to flip on him? I'm not sure, but I think that's Republicans will probably see this and think that it's pushing a bit too far. Because again, with I believe an interview Lindsey Graham had, he talked about the questions he was asking. And I think people are going to remember when Stacey Abrams was asking similar questions about the election and should we be looking at, the Georgia election system. So the kind of objectively, I think people are going to be a little miffed about this, I would say.
Well, it's interesting, Jeannie, because Fani Willis was accused of overreach or criticized of biting off more than she could chew. Apparently, she could have bit off a lot more here. Is this going to end up being a story of judicial restraint?
It's crazy to think that with 19 people indicted, that she's going to be shown to be somebody who was restrained in her approach. But that is one of the stories out of this. And, I think it's also important to remember that in Lindsey Graham's case, he tried to say that he should not have to go before the grand jury because of the speech and debate clause. That argument was rejected by the Supreme Court, although they did say there were certain things he could not be questioned about. So I think for Fani Willis, as she looked at in terms of who they were going to indict, indicting somebody like Graham would have raised constitutional questions. And to Wendy's point previously, it could have expanded this. It could have thrown this thing into the federal courts. That's not something that they want to see happen. And so I think she felt like she could get what she wanted with the 19. And it is fascinating. I am just looking through this now. It is a fascinating read, although I don't suspect it will have much impact for many people on the ground, because not many people are going to sit down and read these 29 pages.
I have to get to the other breaker today that we did talk to Wendy about before, and would love your take on Nancy Pelosi's political future here. Maura, apparently you will have the former speaker to kick around for a little bit longer. A lot of folks thought this was it. I have to admit, I'm not really clear on the motivation as a former speaker to join the rank and file. And of course, she's got the ear of Hakeem Jeffries, but she's getting in line at the cafeteria now like everybody else. Why would she do this again? And what does it mean for the balance of power on Capitol Hill?
Well, I kind of think it prevents the Democratic leadership from really setting themselves up to be the new leadership. When she stepped down and handed things over to Hakeem Jeffries, she's still there. She's a looming presence. And I don't know, to your point, I don't know the motivation. I can tell you that former Speaker John Boehner certainly would not be doing so, and is pretty happy to not be on Capitol Hill at this moment, and pretty happy to be retired. So I don't know what the motivation is for Nancy Pelosi. Has an impressive career. And I think in some of these cases, again, like the Dianne Feinstein, you kind of wonder, why wouldn't you just take, a step back and enjoy your retirement, enjoy your 80s, and be present in your life and not be at the forefront, or trying to be at the forefront of this political sphere. Hang your hat on a good career and bow out gracefully.
Yeah, I think I'd be buying the house in Italy if I were Nancy Pelosi.
Right.
In this case, Jeannie, what do you think? What's the motivation for her to run again and to endure the criticism that comes with the job? There's something that's keeping her in Washington here.
I think so. I think part of it has to do with the fact that California has seen the shift of power to go to the northeastern states. As you look at it now, I think for the first time in modern history, if not American history, the Democratic Party in Congress is controlled by New Yorkers. And of course, if Nancy Pelosi was to retire and not seek another term, this would be an enormous loss for her city. They've already seen the loss of Barbara Boxer, rather. Dianne Feinstein is not going to run again. And of course, if Nancy Pelosi was to leave, that's a lot of clout for San Francisco and California to lose, and at a particularly difficult time for her city. I also think there are questions about succession in her own seat. And then, of course, she's been intimately and personally involved in what is happening with the seat of Dianne Feinstein. So I think for a lot of those reasons, not to mention she's doing this with the work of the current minority leader in the House, Hakeem Jeffries, because she is still a prolific fundraiser for the Democrats, and they are going to need all of that money she brings if they hope to take back the House. So I think for all of those reasons, she is going to stick it out another year. She is putting off the move to Italy, as you say, even though that had to be a really hard decision on her part.
Oh, God, sign me up. I don't know, Maura Gillespie. I'm struck by the irony here that your former boss, the Republican Speaker John Boehner, sails off into the sunset promoting cannabis, and Nancy Pelosi still wants to show up for work every day. What's going on around here?
I think that when the former speaker left, he was proud of what he had accomplished. He ticked boxes that he had hoped to tick, and it was time to hand the gavel over. And I think that he set up Paul Ryan by cleaning the slate for him and doing the tough things that Republicans didn't want to get done and that needed to get done for the good of the country. And, I personally am very proud of him for that. And he deserves to have this retirement and this step back from the political infighting on Capitol Hill. He deserves to have that break from it, truthfully. And I think Nancy Pelosi does too. I just wish she would take it.
I bet you do. What does this mean for Hakeem Jeffries? Jeannie, is this a plus or a minus for someone who's trying to make his own name here as a leader? She's actually done a lot to help him so far in his career in leadership.
Yeah, they work very closely together. I think this is a help to Hakeem Jeffries. Again, she is a very prolific fundraiser. She is the most powerful woman elected in American history, certainly the most powerful speaker we have seen in the modern era in the Congress. And so she has been helpful to him. If she wasn't being helpful, and you got to give her credit for stepping out of leadership and helping the person after her. If it wasn't that way, she wouldn't be staying in this. Nancy Pelosi knows this game better than anybody else. And so for Hakeem Jeffries, this is a benefit at a very tough time, by the way, in his own state. And I know we're going to talk about that, but it is a tough time for Democrats in New York. And so he needs all the assistance he can get.
Mm-hmm. Well, there's a lot to consider there as we go into an election year that will apparently include Nancy Pelosi. I can only assume that she will be a strong surrogate for Joe Biden. Jeannie, that's your expectation?
Yeah, that is. She is going to be out there. She is going to be fundraising. They have been working together, and she is going to be helping them, hopefully, for what they want to do is take back the House. There is a possibility they can do that. It's going to be very tight, but she is going to be there and trying to help the Democrats do that. They can't afford any missteps in California, because in my home state of New York, they had some last midterm and it cost the Democrats the House. They can't afford that again.
Well, we're going to talk next about your home state of New York as Jeannie and Morris stay with us here. Eric Adams, the mayor of New York City, of course, says the migrant situation that is currently gripping New York City will destroy the city if it doesn't change. We'll have that next. After an update on world and national news, let's do that now with Nancy Lyons in the Bloomberg 99.1 newsroom in Washington. Hi, Nancy.
Thanks, Joe. Well, as you jury that first investigated 2020 election interference by former President Donald Trump and his allies recommended charges against 39 people, but only 19 were indicted. The unredacted grand jury report was released today and disclosed among those not charged was U.S. Senator Lindsey Graham. Bloomberg's Ryan Teague Beckwith speculates on why he was spared by District Attorney Fani Willis.
She's deciding maybe not to charge a sitting U.S. senator from a neighboring state with a crime because that's going to be even more contentious and what is already probably the most contentious case that she will try in her career. Two is that there's a speech and debate clause which comes into play, which is part of the Constitution that says that things that a senator is doing as part of having speech or debate about issues of the day, can't be criminally charged.
Bloomberg's Ryan Teague Beckwith. Others not charged but recommended for indictment were former National Security Advisor Michael Flynn and former Senators Kelly Loeffler and David Perdue. Former House Speaker Nancy Pelosi says she will run for re-election to another term in Congress. She made the announcement today in San Francisco at a donors breakfast.
In light of the values of San Francisco, which we have always been proud to promote, that I made the decision to seek re-election.
Pelosi is 83. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 1:40 on Wall Street. We do check markets all day long at Bloomberg. U.S. stocks holding on to gains. The Dow, the S&P, NASDAQ, all in the green. We are on track, however, for a losing week, a holiday-shortened week. Right now, the S&P is up 9 points, still below 4,500. S&P up by about 0.2%. The Dow also advancing 0.2%. Dow Jones Industrial Average up 80 points right now. NASDAQ is up 39. That is a gain of 0.3%. The NASDAQ 100 index also advancing today, up 48 points, a gain of 0.3%. 10-year yield now at 4.26%. We have got the 2-year yielding 4.96%. Spot gold up 0.3%, up 30 cents the ounce. Little change there, up less than 0.1%. 19.19 on gold, while West Texas Intermediate crude is up 0.6%. 87.37. Brent crude, the big story this week, still holding above $90 a barrel. Brent, the global benchmark, up by about 0.7%. Federal Reserve has issued positive data on U.S. household finances. And with that story, here's Bloomberg's Vinny Del Giudice.
Household net worth set a record of $154.3 trillion in the second quarter. Real estate, stock, and mutual fund holdings fueled the increase for those fortunate enough to have a savings and investment portfolio. The S&P 500 rallied the most since 2021 during the quarter. Vinny Del Giudice, Bloomberg Radio.
Lucid Motors shares are trading lower. They are down 2.5%, along with other EV makers. This morning, RBC Capital Markets initiated coverage on the electric vehicle maker with a sector perform recommendation. Among some of the other EV names, Rivian is down 2.2%. Tesla down now by 1.4%. Again, recapping, stocks are pushing higher. Right now, the S&P 500 index is up 11 points, a gain of 0.3%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
This is Bloomberg Sound On with Joe Matthew on Bloomberg Radio.
We're live from Washington with an eye on New York City, where they have spent $1.5 billion so far. $1.5 billion in the last fiscal year on housing and services for migrants, now 110,000 strong on Manhattan Island. How much has the city received in federal funds in that time? $140 million. And that is why Mayor Eric Adams is starting to literally question the future of New York City's economy, the city as we know it, with scores of migrants, their friends and family joining them there. And they're all, of course, being held not only in shelters, but in hotels in downtown Manhattan. Eric Adams says he's not getting what he needs from the federal government or from the state government, for that matter. And let his feelings be known in a town hall that was set up on the Upper West Side this week.
We're getting no support on this national crisis, and we're receiving no support. Never in my life have I had a problem that I did not see an ending to. I don't see an ending to this. I don't see an ending to this. This issue will destroy New York City.
Let that settle for a moment. Will destroy New York City, says the mayor of New York City. We reassembled our panel with Jeannie Shanzano, Democratic analyst, Bloomberg Politics contributor. We also have Maura Gillespie with us today, Republican strategist, founder of BlueStack Strategies. Jeannie, you're a New Yorker, and you know Eric Adams. I'm wondering your thoughts on this right now, because he's upset with Democrats and Republicans. What does it mean when the mayor predicts the end of New York City?
Well, he is reflecting the views of most New Yorkers. A Siena poll just recently, 8 out of 10 New Yorkers said this is a crisis that must be handled. And that is not just in New York City, that is in the suburbs surrounding New York City, where Democrats suffered enormous losses in the last midterm on the issue of crime. They now have 110,000 migrants who have fled to the city, come to the city. They were either shipped or they came on their own because the city has a right to shelter provision. And that is what the mayor is rightly responding to. The city does not have the money. It does not have the services in place to support this influx. And so what are they trying to do? They're trying to get help from the state. They're trying to get help from the federal government, rightly so. And they are saying, this is a crisis. And he is right about that. You know, the school year here just started. You've got, by some counts, 20,000 plus young children enrolled in these schools. And the schools were not equipped for these just a few weeks, if not months ago. So it is a crisis. It's something that has to be addressed. And every Democrat I have talked to here agrees with that, including people like AOC and others. So he is not alone. But of course, he has been screaming this out to the government and at the state and federal level with very limited response at this point. And he's going to keep making this case because he's right to make it.
We spoke yesterday on Balance of Power here on Bloomberg with Nicole Malliotakis, Congresswoman from New York, a Republican, who dropped a statistic I had not heard, suggesting only 13% of the migrants currently in New York City were actually sent there, bussed there by the likes of Greg Abbott in Texas, Ron DeSantis, whatever he's up to in Florida here, and that the rest have simply followed them, friends, family, others looking for relief in New York. And Malliotakis had some pretty strong thoughts on this. Here's what she told us.
Chuck Schumer won't pass our border security bill, which we passed the House in May. That would actually resolve a majority of the problem and actually give the Customs and Border Patrol agents the exact tools that they said they need to do their job, both from a training perspective, from a technology perspective, and from a policy perspective, just allowing them to do their job. And our mayor has exacerbated the problem and has incentivized people to come to New York City by misinterpreting New York City's right to shelter law.
So, Maura, if you agree with the Congresswoman, this is a confluence of problems on both the state level, the city level, well, and all three, the federal level here, if you think that this is, in fact, stemming from the administration's border policies. How do you fix all of that? Or is this just an I told you so moment for Republicans?
You know, immigration has long been a wedge issue for both parties to scream about from the rooftops, but not actually do anything about, right? I mean, we obviously see this as a crisis. And one of the number one concerns for the American families' kitchen table issues is the economy and safety and security. And this really hits at both of those things, right? Because you just laid it out, the number of, you know, the money that has been spent to accommodate this influx, and I think that Republicans are going to hit that, obviously, not only the money being spent, but the lack of security, not only on our southern border, but our northern border. They've been harping on that as well. But at the end of the day, like, we have a great amount of jobs openings, but we need high skilled workers. So there has to be some sort of, you know, how do we safely resolve this issue, but also still keep, you know, the land of the free and the land of hope and opportunity. And what, you know, my grandfather came here, both my grandfathers came here as immigrants, emigrated to America to seek a better life for themselves and for our family. And so, we want to still be that beacon on the hill, a shining city on the hill, but we want to have security and safety. So how do we reconcile those two things? And it's a question that legislators and the president and beyond need to really actually do something about and not just talk about to get a few votes.
I don't know where this is going here, Jeannie. This is not going to be fixed overnight, obviously. Is it appropriate, though, for Eric Adams to be invoking the destruction of New York City on the eve of 9/11?
Yeah, I mean, it's such a good question. And it is, so devastating to think about what happened in 9/11 and the idea that he is using such charged language today. The reality is this is what people in New York City today and New York State and the surrounding areas are really feeling. And as mayor, he does have an obligation to make that case. I do hope and I suspect he will also be holding memorials of what happened on 9/11. So I think he can do both at the same time. And to your point, what's going to happen? What's going to happen is what has always happened in election cycles. Nothing, unfortunately, on the immigration crisis on both sides of the aisle. And that's the unfortunate situation we are in. It won't get passed this year. And that's a devastating reality for all of us.
With the question still, where else will they go? You remember Eric Adams suggested Rikers Island? That didn't go over very well, so we'll keep you posted on what happens here. It's reaching a boiling point. I'm Joe Matthew with our panel in Washington. This is Bloomberg.
your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. JP Morgan Chase says Apple shares are unlikely to outperform in the second half of the year. And with more on the story, here's Bloomberg's Steve Rappaport.
Charlie, analysts have cut their price target on the world's largest company to $230 from $235 per share, saying China's clampdown on iPhone use comes as competition is heating up in Apple's largest foreign market, where the homegrown Huawei Technologies recently launched its flagship model, the Mate 60 Pro. Still, they say China's plan to broaden the ban on the use of iPhones by government and state company employees probably won't have a material sales impact, since previous curbs haven't hurt consumer behavior much. JP Morgan says Apple stock performance for the rest of the year now hinges on its iPhone 15 launch next week. Charlie?
And that's Steve Rappaport reporting right now. Apple shares trade at $179.58. Today, they're up by 1.1%. A source tells Bloomberg Goldman Sachs Group is planning its annual cut of underperforming workers beginning late next month. The source says reductions this year will be at the lower end of the bank's usual range of 1 to 5% of its workforce, and they will take place from late October to early November. Goldman Sachs shares, they're up today by about 0.8%. Goldman, by the way, had a head count of 48,500 as of December. And sources tell Bloomberg Barclays is preparing to cut hundreds of jobs as soon as next week as the firm looks to trim costs amid quieter markets. And those are our top company stories at this hour. I'm Charlie Pellet, and this is Bloomberg.
This is Bloomberg Sound On with Joe Matthew on Bloomberg Radio.
Live from Washington, we'll add Kaylee Lines to the conversation coming up in just 5 minutes. Let's bring you up to date now. World and national news with Nancy Lyons in the Bloomberg 99.1 newsroom in Washington. What's up, Nancy?
Well, Joe, the full final report from the special grand jury in Georgia that investigated former President Trump is now public. This was the group of people that recommended charges that eventually led to the indictment of Trump and 18 others with felony racketeering and numerous conspiracy counts. The report lists those they recommended for indictment but were not charged, and that list includes Senator Lindsey Graham, former National Security Advisor Michael Flynn, and former Senators Kelly Loeffler and David Perdue. Bloomberg Washington senior editor Wendy Benjaminson on why District Attorney Fani Willis did not indict them.
It's possible they were already cooperating, and Fani Willis, the prosecutor down there, decided not to indict. More likely, considering one is a sitting senator, the other one was a high-ranking White House official, and the other two were senators, that she just decided it wasn't worth the hassle.
Bloomberg's Wendy Benjaminson tells Sound On one of those hassles might have been moving the trial to federal court. The grand jury, by a unanimous vote, did find there was no widespread fraud in Georgia's 2020 election. Cascading crises will pose a challenge to long-term economic growth. That's the warning the leaders of the group of 20 nations plan to issue at their summit in India this weekend. That's according to a person familiar with the draft of their communique. Bloomberg government Zach Cohen is following the G20 from Washington.
Chinese President Xi Jinping is not going to this meeting of the 20 biggest economies, although Premier Li will be there. And really the key question for the Biden administration is to continue to build up support among democratic nations as sort of a counterweight to the Chinese regime.
Bloomberg government Zach Cohen says other hot topics at the summit, Ukraine and the climate. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons. Now back to you, Joe.
Hi, Nancy. Thank you. From the All News is Local file, we bring you to the Rosemary Hills Elementary School in Silver Spring, Maryland. It's right on the Beltway. It's not very far from the Capitol itself here in Washington, D.C., where recess is being held indoors today, and they have extra police and security surrounding the school because of a tweet from Ted Cruz. How the senator from Texas is impacting life in Silver Spring, Maryland may be a question for you until you read the tweet. And let me tell you that the school's decision to require children in a single classroom to wear masks after several people in the class got COVID has apparently become a national issue. Ted Cruz retweets from a local reporter this story that I just mentioned in Montgomery County, Maryland, writing simply, If you want to voluntarily wear a mask, fine, but leave our kids the hell alone. Which I feel like I've heard before from Ted Cruz.
Donald, you're a sniveling coward, and leave Heidi the hell alone.
I don't know where it sounded familiar. Let's reassemble the panel for some final thoughts on this. Jeannie Shanzano and Maura Gillespie, is this sort of yelling fire in a crowded theater? Jeannie, as soon as you go there with the masks and COVID on Twitter, you got to shut down an elementary school. Is this irresponsible?
Yeah, Ted Cruz just can't get out of his own way. Ted, leave the children alone. Let them go to school without security and the national media presence around them. What a mistake on his part to draw attention to this.
It is kind of weird, Maura. I've got less than a minute here, but, you know, we're talking about being free and letting the kids roam. They're having recess indoors today as a result. I guess that was not the intention.
I honestly don't know what why the response was that they needed a police presence on a elementary school grounds, but as far as for recess, but it just shows you how extreme our politics has gotten, and we need to take the temperature down in so many respects, this being one of them.
Cool it down, bring the temperature down, simmer down. Maura Gillespie, many thanks to you. And Jeannie Shanzano, great conversation, a great panel. I'm Joe Matthew in Washington. Hour 2 of Sound On starts right now.
Now, from our nation's capital, this is Bloomberg Sound On.
We're talking about red and blue division within states. How busy is Donald Trump's legal team going to be? Is the economy stupid? Is that actually what will decide this race?
Bloomberg Sound On. Politics, policy, and perspective from D.C.'s top names.
Federal spending combined with too lax monetary policy has produced this 40-year high in inflation.
China policy is driven basically by domestic politics.
American families are finding themselves further behind the 8 ball. To get anything done in this Congress, it's going to have to be done in a bipartisan way.
Bloomberg Sound On with Joe Matthew and Kaylee Lyons on Bloomberg Radio.
Joe Biden arrives at the G20 with a warning. Welcome to Hour 2 of Sound On as the president lands in India now for the big gathering that will not include Presidents Xi or Putin, to warn of cascading crises that could impact the U.S. and global economies. We're going to look at the goals for the administration this weekend and the possible risks facing President Biden with John Sitilides at Trilogy Advisors, a diplomacy consultant for the State Department. His insights are straight ahead. The Georgia grand jury that first investigated Donald Trump recommended indicting Senator Lindsey Graham as well as Michael Flynn, among others. We've got insights now unsealed on their recommendations that we'll bring to you. And some House Republicans are rejecting the proposal to link government funding with an impeachment inquiry. We're going to discuss all of this with Bloomberg politics reporter Ryan Teague Beckwith, and we'll compare notes later with our friend David Weston, the host of Bloomberg Wall Street Week. All after a look at Wall Street. Let's get up to date on trading now with the help of Charlie Pellet in New York. Hey, Charlie.
Thank you very much, Joe Matthew. Happy Friday right now. A holiday-shortened trading week. We are on track for a losing week for the S&P 500 index. As of now, just under 2 hours to go ahead of the close. Right now, the S&P is up 12, up by about 0.4%. Looking at a small gain for the S&P after a 3-day drop. The S&P holds below 4,500 at 44.63. The Dow up 100 points now, up by about 0.3%. And NASDAQ is up 51 points, a gain there of 0.4%. 10-year yield, 4.25%. We're looking at the 2-year yield of 4.97%. Spot gold, little changed, up just under $1 now to $19.20 the ounce. West Texas Intermediate crude up 1%, 87.70 a barrel. Brent, the global benchmark at 90.79 barrel of Brent, up now by just about 1%. Well, certainly Wall Street is keeping an eye on temporary spending deal discussions in Washington. Quincy Crosby is chief global strategist at LPL Financial. And this morning on Bloomberg Markets, she told us she fears over a government shutdown could be a time to put money to work.
You have the Speaker of the House position jeopardized. He'll be out. And he doesn't want to see that happen. And no one wants to see this kind of dislocation in the government. But you'll hear the comments, are the Social Security checks going to go out? Are the Medicare, is that going to be paid? It's a drama, but yeah, it's a buying opportunity if it happens, yeah.
And you can hear more of that conversation on the Bloomberg Markets podcast. You can download it wherever you get your podcasts. Sources: Goldman Sachs planning its annual cut of underperforming workers beginning late next month, and Barclays said to be preparing to cut hundreds of jobs as soon as next week. Again, recapping, S&P higher by 13, up 0.3%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.